Let's start off with our first chapter in corporate and other laws. Totally, we have about 15 chapters in the whole syllabus. Not about, exactly we have only 15 chapters, correct? Now, on average, even if each chapter takes 5 hours, what is 15 into 5? 75 hours lectures will be done, another 25 hours for workout of questions and MCQ. So, max 100 hours will be law, correct? Now, if you are watching these marathons, etc., they are for revision. Of course, it's useful. But what we are going to do in these 100 hours for law is going in depth in such a way that you will understand it fully. Everybody will start usually with first preliminary, incorporation, prospectus, one by one, correct? We are also going to do the same thing. I will start from chapter 1 only and go till last chapter. But I have a sentiment, I have an emotion where every batch I start off with a chapter called dividend. Okay, and it's very easy. Even though it's a chapter in between of our syllabus, you can easily understand. And this is one chapter that mandatorily comes in every exam for 3 to 5 marks. We get it. So you can also get those marks and feel confident when we start off with law. Okay. Now, for every chapter, I told you section numbers and form numbers are important. Correct. In this chapter alone, we don't have any forms, because when will forms come? Forms will come when you are going to file something to the ROC. Here, there is nothing to file to ROC. How do you remember section numbers? Don't look at IO 148 sections plus foreign company so much. No. When you are learning a particular chapter, that chapter section alone, first learn the limits. So, dividend limits is 123 to 127. Be clear with this limits, sir. I can guarantee you by the time this chapter gets over, all these section numbers you will by heart along with the class. Zero extra effort. Just interact with me. That's it. That's it. Okay. Few questions to answer. Why we have dividend, first of all? How it is paid? How it is paid and how it is computed? For whom I will pay dividend? And when I will pay dividend? These are basic questions that you have to answer and some procedures. Before I get into all the concepts, let's understand first what is dividend for those people who don't even know what is dividend and why we are paying dividend. Let's say a company has sales of 500, purchase of 200, after all the expense, whatever is there, let's say all the expense put together is another 200. So, net profit will be 100, correct? In this 200 only, if there is any interest, we will pay interest also, correct? For me to run the business, my revenue comes from where, or my capital comes from where? Either equity share capital, preference share capital, or loan funds, borrowed funds basically, correct? So, if you have any borrowings, you end up paying what? Interest. Then after net profit, you will first pay income tax at roughly 30%. I will reduce another 30. So, government will take away money if you have profits first. Then you are left with profit after tax 70. Correct? From this 70 only, if I want, I will declare dividend. Are you following, guys? Are you all understanding? What if company has loss? All the years from the start till now, loss. Reserves also loss. Can I pay dividend? Answer is no. So, if you are not paying dividend, then this chapter itself is not applicable for you. Are you following up? This is that one unique chapter where it's applicable only if you pay dividend. For example, audit and auditors chapter is applicable for every damn company, whether it's OPC, small, private, public, whatever, it's applicable. Are you following, guys? Those who are watching for the first time, don't worry, I'm teaching it from scratch. Dividend you will easily understand. Okay. So, why dividend is paid? Because it's like a return for my shareholders. Correct? On FD or loan, you pay or receive interest. So, when you are investing in a company's shares, you have to get some return. Now, I'll tell you how the dividend is paid. Let me keep the balance sheet over here. And let me say equity share capital. Let's say it is 1 lakh shares into 10. How much is it, guys? 10 lakhs. Simple computation. Now, and in balance sheet, generally it will be face value of shares. Correct? Now, dividend is paid as a percentage of the face value. Assume everything here, rupees in lakhs. Okay. Dividend is paid as a percentage, Let's say company has decided to pay dividend at 12%. How much, guys? 12%. So what is that over here? 10 lakhs. So computation will be 10 lakhs into 12%. How much? 1 lakh 20,000. So this is 70 lakhs. Correct? Profit is 70 lakhs. So I'll minus how much? 1.2 lakhs. Everything in lakhs. So balance only will be transferred to my, what to say, profit which is retained. This is given to my shareholders. Are you all agreeing, guys? Now I have next question for you. Sir, what, sir? Very basic you are taking for us. Now you answer this. This everybody understood? 1 lakh into 10 on face value I will pay. Same shares, 1 lakh into 10, but paid up value rupees 7. Paid up value is 7. You all know what is paid up value, face value. That means rupees 3 is calls yet to be made. Are you following, guys? Not calls in arrear, not calls in advance. Call is yet to be made. So what will be in balance sheet value now? 7 lakhs only will be there. Correct? It will be only 7 lakhs. Correct? Now tell me the computation of dividend, guys. Are you following? Now it is 12%. Correct? So I will give you option 1. Sir, no sir, still it will be 10 lakhs into 12%. I will still pay 1 lakh 20,000. Option 2. I have paid only 7 lakhs. I got only 7 lakhs. So 7 lakhs into 12%. Quickly compute how much you are getting, guys. 84,000. Now my question, we have not even gone into sections. The first question, if I have partly paid up shares, dividend is 1 lakh 20 or 84. How many of you 1 lakh 20? Hands up. How many of you 84,000? Hands up. How many of you? I don't know. How many of you both? Dividend? Okay, one more answer is dividend can't be paid if it is partly paid up shares. Good. We are discussing because all these days you used to think 10 rupees I will pay directly. Correct? So if partly paid up shares come, okay, what is the answer, sir? Act itself has given the answer. Articles also has the answer. Answer is both is correct. It is company's choice to pay either on 10 rupees face value or pay on 7 rupees. Are you following, guys? Let me tell the logic. And this concept is not in dividend chapter. What I am explaining now, section 51, section number 51 of the Companies Act, where 51 says dividend to be, what is the dividend to be paid if shares are partly paid up? Are you understanding? Which section? 51. Now there is no point of me teaching this in share capital chapter when the connection is in dividend chapter. Like this I will interlink a lot of sections. Are you following, guys? Section number 51. Are you all with me, guys? Okay. Now what is the logic, sir? Now see, if you invested in bank 10 lakhs as FD, bank will pay you interest on 10 lakhs of. That means my return should be on what I paid. Correct? My return should be on what I, on investment is my capital. Correct? So here also the investment is only 7 lakhs. Correct? So technically speaking, dividend is a return on the capital that you have contributed. What you contributed is only 7 lakhs. That means technically speaking, more practically, the return should be on what you paid. So it should be 7 lakh into 12% in defense of company. Company will tell you didn't pay fully. Why should I pay you interest dividend on something that you have not paid? If I pay on 10 lakhs, it's loss for me, no. I'm paying you dividend on the 3 lakhs which you have not paid also. Then shareholder will argue, hey, if you made the call, I would have paid. No. You didn't make the call, so I didn't pay. Why am I being punished for your mistake? So both sides' argument is valid. So that's why Act is saying, let me not interfere in this. 51 says, let the company decide what is authorized in the AOA. For those students who are watching first time, you don't know what is AOA, leave it. Section 51 says what? Option of the company. But default option, default is what? First option. If everybody is silent, you will pay in the first option. But if company wants, they can pay as per the second option. Is this clear for all of you? Understood. Which section is this? 51. But we are in which chapter now? Dividend. So we are done with the concept of why dividend, because if you invest in a bank, you get interest. If you invest in a company, I need some return. In India, which company pays the highest dividend? ITC is the company which pays the highest dividend because ITC is a cash rich company, meaning if you look at their balance sheet, they have a cash of close to 6,000 crores of cash balance and bank balance of another 3,000 crores. 10,000 crores of cash they have. They don't know what to do with it. Sir, reinvest and do what? Already ITC has done hotels, all the star hotels. Classmate is ITC, Ashirwad, Bingo. They have done so much. And after doing all that, they still have so much cash because of all the tobacco contribution we have done in the country. So they are saying, I don't know what to do with the money, take the money back. So every year for the last 10 to 15 years, ITC pays good amount of dividend. Are you following, guys? Now, next question. What is ITC's share price in the market? Around 400 rupees per share. What is the face value per share of ITC? 1 rupee per share. Not 10 rupees. Face value is 1 rupee. Full price is 400. Are you following? That means what is the difference? Premium. Not securities premium. Market premium. Market feels this 1 rupee face value share is worth 400 in the company because market value of the company. Now, ITC is declaring dividend at 20%. How much? Now the 20% will be applied on one face value or market price 400. How many of you 400? How many of you 1? Answer is 1. Okay, because 400 is market price which keeps changing every day. Okay. What you invested might be 400. What you invested is 400. Now follow very carefully. When you pay 400, 400 is not going to company. It's going to the other shareholder who sold to you. Let's say I purchased the share from Ashwin for 400 rupees. 400 goes to Ashwin, not to company. Are you getting it? It's not going to the company. For company, when they issued the shares 20, 30, 40 years back, they got only 1 rupee per share face value, and they would have also collected securities premium. They would have collected. They might have collected, but that is their gain. The gain that they are, what to say, asking for you to invest. So effectively, dividend is only paid on face value of shares. Face value is 1 rupee. So 20% will be paid on 1 rupee. That means for every share of ITC that you have, you will get 1 into 20%. How much? 20 paisa. Correct? That means what, sir? You just know, sir, highest dividend they are paying, sir. That means I have to buy one share for 400 rupees and get 20 paisa every year. Correct? That's the truth. That's why ITC, when they actually declare dividend, if you look at their financials, they will not declare dividend of 20%. They will declare 300% as the dividend rate. If you see in all our exam questions, you will see 10%, 12%. But practically, ITC declares 300% of dividend. Now, what is 300% of 1 rupee? How much? 3 rupees or 300? 3 rupees. Correct? Yes. Yes or no? 100% is 1 rupee. So 300 is 3 rupees. So if you buy one share for 400 rupees of ITC, you will get 3 rupees per share. Sometimes they declare even 500%, 1000%. Are you following, guys? So it's always percentage of face value. If it's paid up value, you can do it proportionately. Clear? Is this part clear for everybody, guys? That's it. So with this, why dividend and general knowledge and practical knowledge around dividend, you have understood to an extent. We have finished how many sections? Section number 51. Is this clear, guys? Next we are going to go. I will show all this in the material, guys. We have the material. This is the new material that we have. Now, here lot of things are added. If anybody is watching the class with the old material of mine and this one, we have added lot of things, and I even changed the order of content. Lot of things are added, but in previous class to this class, everything is told in the class. Okay. Previously, my material used to be a classroom material. So if you watch the class, with that material will be enough. 200 pages with the class enough. Now this material can be purchased separately, and you can watch any class with this book. So now I have made it a market material that you can do self-study with this itself. Are you getting it? That's the difference. You can do a self-study. It's a replacement for ICA study material. Are you following? So for that reason, because everything I'm telling in class will also be in this book now. So it's not 200 pages, it will be 300 pages. That's it. Are you following, guys? Approximately another 100 or 150 pages will be added to the overall book for everything. Is that clear for everybody? Understanding? Okay. I will come here in some time. Where is it? Yeah. Now let's go to next section. Same thing, same concept over here. Now this net profit is how much? 100. From this 100, who will be paid dividend first? So we have two types of shares that you studied in foundation itself: preference shares and equity shares. Who will be paid first? Who will be paid second? Is this clear, guys? Okay. Now next thing, is it mandatory to pay dividend every year even if I make profits? No, it's company's choice. Answer is not mandatory to pay dividend. Are you following? Understanding, guys? But however, for preference shares, especially preference shares are classified into two: cumulative and non-cumulative. Then if it is cumulative preference shares, you have to pay dividend every year. If you don't pay dividend, the dividend will be accumulated, especially when you have profits. Are you following? Clear? Sir, I am not understanding, sir. Let me explain. This year I had a profit of 100. Now preference shares are generally something that comes with interest rate. It comes with a rate. For example, 12% preference shares. Are you following, guys? So if you don't pay preference shares, let's say this preference shares is 10 lakhs. Okay. How much, guys? 10 lakhs. So what will happen? In year 1, I didn't pay dividend, sir, but I'm supposed to pay how much? 1 lakh 20 or 10 lakhs into 12%. I didn't pay. It will be carried forward. Year 2 also I didn't pay, sir. Then it will be carried forward how much? 1 lakh 20,000. Total will be how much? Now this has to be paid in the future. Are you understanding, guys? This is only for cumulative preference shares. Are you following, guys? For non-cumulative, nothing like that. I will pay only if I have profits. If I don't pay, no accumulation. Are you following? Sir, now third year also I didn't pay. 1 lakh 20 I didn't pay. Now it's accumulated to how much? 3 lakh 60. But all the 3 years, company is having profit. Now, who decides to pay dividend? Who has the voting power to decide that dividend has to be paid? Equity shareholders. Are you following? So look at this magic. Look at this magic, guys. In each of the 3 years, my profit is, for example, 1 lakh, 1 lakh, 1 lakh. Total profit how much? 3 lakhs. Correct? Are you following, guys? Now, the decision to pay dividend, that voting power, who has? Equity shareholders. Okay. Now, my company has both equity and preference shares. Now, look at this carefully. I'm not teaching you what is there in the law. I'm teaching you why the law is like that. That's why our class is going to be lengthy, but I can guarantee you nobody will tell you this logic itself. Today you will realize this. Now, equity shareholders are not declaring dividend because if they declare dividend, who will be paid first? Preference that this 1 lakh, 1 lakh and 1 lakh will go to whom? Correct? Now, if I don't declare, where will this money be? It will go to my balance sheet, reserves and surplus. How much? 3 lakhs. Correct? After 5 years, I will issue bonus shares and convert this reserves to equity share capital for preference shares. Now, who's getting this benefit? Equity shareholders. So, if you are equity shareholders, if you are smart enough, little bit above average IQ, you will not declare dividend, and after 5, 7, 10 years, you will issue bonus shares. For issuing bonus shares also, I should only pass a resolution. I will take entire reserves and convert to equity shares. So, what this preference shareholders will do? Beg. Why they are there? No voting power also. They came for first preference dividend, that also you are not giving them, and that is why the law says for 2 consecutive years, if you don't pay what? Preference dividend, from the 3rd year onwards, preference shareholders will get voting power. Now you understood logic. All these days, if you already studied, you will mug up. If preference shares for 2 years, dividend is not paid, they get voting power. Hello boss, why? Got the logic now? Why? Now I'll show that in the material, guys. Look at this. In the material, where is that? Types of shares here. Okay. This section, what I discussed now, is not in dividend chapter. Already we finished section number 50. Now this types of shares is section 43 in share capital. Don't worry, when I go to share capital chapter, I'll quickly revise. Like a marathon and tell, go and watch dividend intro. Are you following, guys? So in this, so usually other books will have this in share capital chapter. I told you, I'm going to teach you by connecting sections. So here I'm keeping it in shares. We have 2 types of preference and equity shares. Everything I'm teaching you is there in the book, which is exam oriented. But the examples is not there in the book. Okay. Examples is where you're going to take what? Running notes, and that you should take along with the class, guys. I'm going very slowly. So look at this. Look at this. Cumulative preference shares, non-cumulative preference shares. I told in non-cumulative, dividend is paid only in the years of profit. I already explained this. Correct? No accumulation if no dividend is declared in a year. Is that clear, guys? Next, dividend gets accumulated unless paid in full. I can pay partially also. 12% dividend. I am paying only 6% now. Clear, guys? Equity dividend payable only after clearing arrears on cumulative preference shares. Are you following, guys? Understanding? Clear? Yes. Correct. Yes, I will answer the doubt. Towards the end, I will answer it. Now, so we saw this. Equity shares is next to what? I will explain the doubt towards the end, guys. Okay. Dividend dependent on equity shares. It depends on dividend policy and availability after satisfying rights of preference shareholders. Sir, you told voting rights is there. No, sir. Where is it not there in the book? It is there. Voting rights is there in a separate section called section 47. In 47, they will tell in case of cumulative preference shares, if dividend is not paid for 2 years, then they have voting rights. Are you following, guys? Understood? Clear? All of you with me? So, are you all with me, guys? Understood? Okay. Now, I told you in the intro session, or again I'm telling you now, we have something called differential voting rights. Generally, one share is one vote, but in differential voting right, one share might have 10 votes. Now, in that case, my question for you, in differential voting rights, one share has how many votes, sir? Can be company's choice. My example is 10, it can be 20, it can be 50, it can be 100 also. Are you all with me, guys? Now, that means for them, dividend also will be 10 times more. Huh? No. Are you, for them, dividend will be only what is declared for normal equity shares. Are you following? That's what I gave here. In case of dividend, DVRs, dividend will be declared on face value as per section 51 on face value. Differential is only for voting and not for. Is it clear? Understood, guys? Everybody understood till here? Okay. So what all sections we finished so far, guys? Follow what all sections we finished so far. 3 sections we finished. I am yet to start dividend chapter. It's like pre-dividend basics, because these things you learn in share capital chapter. You will not link and learn, but exam will ask you a question by interlinking this. You will struggle. So wherever possible, I am reducing that stress for you. Clear, guys? Some sections I will give it over here. In share capital also I will keep 43. Are you following, guys? Clear? Now let's revise what we saw till now. Sir, for exam, what is important, sir? For exam, what is important so far? Nothing on the board. Revise with me and remember. First we saw section 51. Dividend will be paid on face value or paid up value at the option of company. Online live recording, no notes. Repeat with me. In the class we finish revision. You will go home and revise for another 30 minutes. That's it. That's it. Okay. If question is silent, then you will pay on face value. This section 51. Dividend will be first paid to preference. Then it will be paid to. The types of shares is in section number 43. 43 types of shares. Okay. Now, preference shares is of 2 types, cumulative and non-cumulative. Non-cumulative, what to do? Nothing to do. Dividend not declared, leave it. In case of cumulative, if dividend is not paid for 2 years, from the 3rd year they will have voting rights. That voting right is in section 47. Are you following, guys? Clear? All of you understanding? Clear? Voting rights in section 47. We also have a concept called equity shares subset is differential voting rights. For them, voting is differential. Will dividend be differential? No. That's all for exam. In exam, they will not ask us why after 2 years voting power is there. Not relevant. Clear? All of you understanding? Sure, guys. Okay. Fine. Now only we are going to enter actually dividend chapter. We are actually going to enter dividend chapter, but we finished 3 sections before entering. So let me go to the chapter. This is the overview of the chapter, guys. Clear, guys? Okay. Let me give you the overview first. For every chapter when I start, I will give you the overview of what to learn in this chapter. Now when I teach these sections, you will get more connect. Okay. Everybody understanding? Hello, loudly. Perfect recording. I hope you guys are understanding, guys. I am watching you. Keep repeating, guys. Now, first this chapter, we finished introduction to dividend. Over. Hello, just now I finished. No. Correct. So we have totally, in this chapter, we have declaration and payment of dividend is the first section. 123. How to declare and how to pay. That section itself will take away 50% of the time that this chapter will take. Are you following, guys? 50. For example, if this lecture is going to be for 2 hours, half the time will go for section 123, which talks about how to declare dividend, how to pay, whom to pay, all of those things, mode of payment. Then next is 124, unpaid dividend account. Till the end, they are all smaller sections. So first we will make the dividend payment of. If you don't pay, next is section 124. What will happen if you don't pay? Next, if there is any issue, there is section number 125. Issue in payment, some issue, some pending case, all of that. Sorry, that issue is 126. If you don't pay for 7 years, what will happen? That is section 125. Okay. Next to 126 is there is any issue. If you don't pay at all, what is the penalty. Again, let me give you the overview, guys, once. When I go to sections only, you will get clarity, guys. The first section talks about how to pay the dividend. Second section talks about if you don't pay dividend as per the timeline in previous section, what happens. Third section, I have not paid dividend for such a long time, 7 years, what happens. Next to 126, some issue in paying dividend, what to do. Last section, penalty if you don't follow these properly. Clear? Just an overview, understood. Don't worry about section numbers. Now let's go into the chapter. First section, section 123. All of you with me, guys? Clear? Okay. Now, you need to understand there are two types of dividend. How many types, guys? Two types of dividend we have. Okay, two types of dividend is there. Follow carefully with me, guys. Let me draw the financial year for you. In the financial year, if you see, guys, we have 1st April 26, year ends on 31st March 27. After that, AGM will happen sometime on 31st August 27. For those of you who are watching first time, understand that AGM is a meeting of all the shareholders of the company. Correct? In a company, we have 3 people. Okay. Company, board of directors. Correct? Now, company is owned by whom? Shareholders. But managed by whom? Board of directors. Is this clear for all of you? So, in these 12 months, whatever is happening in these 12 months, board will run the company, and in the AGM, they will report to whom? Shareholders, with respect to the performance of the company. Okay. Now, what will happen if I want to declare dividend? Let it be for preference shares or for equity shares. Okay. Board will recommend, okay, let us pay dividend this year. Are you following, guys? For example, if board is recommending 15% as the dividend payable, who are the owners? Shareholders. In the AGM, they will approve the dividend. Board will do what, guys? They will recommend, or also we can use the word propose the dividend. So, board will recommend or propose. In AGM, shareholders will approve it. Is that clear for all of you, guys? Everybody understanding? Hello? Clear? Very clear over here. Okay. Now, follow carefully. Board is saying 15%. Can I, in the shareholder, I am the owner, no. Board is my agent. I am the company. Shareholders are the owners. Board is the agent. Board is recommending 15. Can I, being the owner, can I approve it? Can I approve a higher amount? Meaning 15% is there. You have 3 options, actually 4 options that you can do. You can tell, no, I don't want any dividend. Or you can tell, okay, give me the 15% as it is. Or you can tell, no, I want 17%. Or you can tell, give me only 10%. Now, answer is there in the material. I will not teach the answer. I will tell you a logic, and then you will know the answer yourself. Your parents are giving you pocket money. Okay, you all get or not? Hello? No? You're not getting. How are you eating here? What are you doing then for earning money? Behind. What you are doing? Okay, online students, you're all getting pocket money. Let's say for this month, your parents gave you 500 rupees pocket money. Correct? Okay, now, what can you do? Can you tell, no, I don't want pocket money? Hey, you can tell or no, guys. See, whether you say no is different. Do you have the right to say no? No, I don't want, I have enough money. But we will not say that. If they are giving you 500, what you will do mostly? You will take it. Correct? Can you tell 500? Yo, so much. Give me 100 rupees. Enough. Will you do that? Can you do that? Yes. Okay. You can do that also. That means you can say no for pocket money. You can tell no need 500. Give me 100. You can ask for reduced amount. Can you tell 500? Hey, what is this? Give 2000 rupees you give. Can you ask your parents like that? Hello. Some exceptions are there. Messi is there. He will ask, what, sir? I get iPhone also every month. But general, I'm talking about general parents in India. Correct. Can you ask for 2000 rupees like that? What you will do? Realistically, what you will do? You will take what is given. That's it. Correct. That means who has the power? They only have the power. If they give you 50 rupees also, you will take 50 rupees. Not enough for bus or auto. Walk and come to class. Correct. Are you following, guys? So, shareholders also have the power to say no. But will they say? Have the power to reduce. But will they reduce? Usually what they'll do? Accept 15 as it is. Can they ask for 17%? Logically, why no they are saying over here for asking 17%? Who knows the company's position in last 12 months? Who knows how much is right? Board of directors. So, you cannot ask for a higher percentage. Are you following, guys? Clear? Understood? So, if I come back to the chapter, the first thing, look at this. Under the definition below that, I would have given, it is recommended by whom? Board of directors and approved by the, everything I'm speaking, exam oriented points are there in the material. Are you following, guys? I will highlight it over here. See, my goal, I can teach like others. We keep the color book, highlight, okay, it is paid both to equity and preference shareholders from contribution to capital, similar return on investment. Okay, understood? And teach here, no. Majority of the time, I will be on this board only. Are you following? I will be here only. In the notes, I will keep highlighting over here and then you can go through it when you're reading. If it's a crash course, marathon, I will be here only. Are you following, guys? Clear? Are you understanding? And next one. Now, generally this dividend is declared where? In the AGM. So, why AGM? Shareholders meet in AGM. For those watching first time, don't worry about what is AGM. It's like parent teachers meet if you're in school. All shareholders are meeting. Don't write that in exam, guys. What is AGM? It is like parent teachers meet. Don't ask me if you don't get marks. Now, generally, dividend is declared in the AGM and usually interest is paid once a year. Usually, what to say, returns are given once a year. Correct? So, what dividend is paid in the AGM is the final that you will get. Correct? That is called final dividend. Are you following, guys? But apart from that, some companies during the year itself, also they will declare dividend. They will declare dividend. Why, sir? Why are they declaring during the year? I will not answer now. Okay. End of the chapter, we will answer. That time you will understand why. Okay. That dividend declared during the year, during the movie, in the middle, it's called interval. Interval. So, during the year, apart from AGM, where shareholders are not there, if I declare dividend, that's called what? Any time other than AGM, other than that one day, if you declare, it's called interim dividend. And that's why we have two types of dividend called final and interim dividend. Final dividend declared at the AGM only is called final dividend. Interim dividend declared by board between two AGMs. Now, when it comes to interim dividend, the final dividend board can recommend, shareholders will approve or declare, correct, approve it. But interim dividend is declared during the year. So, during the year, how can I call all the shareholders again? That's why interim dividend is declared by the board itself. Are you following? For now, understand that there are two types of dividend. Final and again final and final dividend is declared where? AGM. Interim other than AGM. In simple words, between two AGMs. That's how it's defined. Interim is declared as dividend between 2 AGMs. Is that clear for all of you? Clear? Sir, then in the material, it will start off with interim dividend, but I am not going to start off with interim dividend, guys. Okay. I will be going to final dividend only. Now, both interim or final dividend. Okay. So far you have understood. So we have interim dividend or final dividend. Is that clear, guys? Now, both these dividends, can I tell I am ITC? Instead of giving you cash, here, take cigarettes. Oh, instead of giving you cash, I have ITC Grand Chola Hotel. One day to stay there, do you know how much? All the ITC hotels in India are termed as luxury hotels. Okay. To stay in one ITC hotel, for example, Kolkata, Mumbai, it will cost 10 to 20,000 rupees per day of stay. Sir, what, sir? That much you pay me in a 6 months class I will take for you. Correct? But for them, one day stay, you can check into the hotel at 2 p.m. and next day you should come out by 12 noon. That's all, not even 24 hours. And if you cross 12 noon, again they will put money. Are you following, guys? Now, I am saying I am ITC. Instead of giving you dividend, I am saying dividend means I will give you only 5,000 rupees. Stay in my hotel for 3 days, I am saying. Can I do that? No. Why? It has to be paid only in cash. That means come to my company, stand in the queue, I'll give cash for everybody. Cash means in banking channels, meaning it can be given as dividend warrant, like DD, dividend warrant, or directly transferred to your account. Today, it is directly transferred to your account. Are you following, guys? That's what it's there over here. So, it is payable only in cash. Okay, but I have to pay to Vaishnavi. Okay, Vaishnavi is saying I am abroad. I am closing down all my Indian bank accounts. Pay it to my sister, brother, parents, grandparents, or my friend. Can I do that? Yes. That is fine. I can instruct the company to pay to somebody else. That is totally okay. This is where all the Binami transactions happen. Okay, what will happen? The politicians or the big rich people, if they get the full dividend for them, what will happen? Lot of tax. So I will have some 100 Binamis. I will tell the company, pay all these Binamis. So in the, what to say, shareholder certificate, my name only is there. But income is going to them. They will collect the dividend, withdraw in cash, give it to me. Are you following? For that, we have separate section 89 and 90 of Companies Act, how to tackle Binamis. When I go there, after so many hours, I'll teach you. But for now, sir, dividend is payable only in cash, and it's payable to registered shareholder Vaishnavi or his order or his banker. Banker na paid to her bank account. Or order means whomever she is ordering to pay, they will get paid. Are you following, guys? Everybody understanding? Clear? So with this, we are done with the most intro part. 2 pages of the book is done except interim dividend. Now we are coming to the main section, which is section 123. Have you all understood till now? Can we revise? Exam oriented. What is important till now? Exam oriented. See, end of the day, what's important is what's important for exam. Quickly, dividend, can it be paid on face value or paid up value? Both. At section number 50, types of shares, preference, equity, 43. 43. In preference, generally it's paid first to preference. Paid first to preference. Cumulative preference shares, 2 years. If it's not paid, they'll get voting power, and every year dividend will be accumulated. So this dividend is accumulated every year. Will it come as a liability in balance sheet? A contingent liability. It's a contingent liability. We will see that in accounts. Are you following, guys? Clear? Then we saw this dividend. There are 2 types. What is it? Final and interim. Final is declared in the AGM. Interim, other than AGM. Final dividend is what is proposed or recommended by whom? Board. Approved by shareholders. But interim dividend is recommended and approved by the board of directors because there is no AGM. Are you following? Are you understanding, guys? Clear? Everybody clear with this? Okay. Next, what we told, dividend will be paid only in cash through banking channels. That means these 5 points only will come in our Gen Z notes, and today I will do Gen Z notes with you guys. Are you following, guys? Clear? Okay. Now we'll go to section number 123. Those who are watching recording, the introduction to dividend is done. You will watch 123 in the next video. Let's start off with section 123. This lecture for section 123 will take half the time of total dividend, like I mentioned, and is the most important one. Most of the questions also always come from here only. Let me start off. Let's say dividend to be declared by the company is 300. Now I am not getting into star is 5 lakhs, percentage 20%. No. We have already discussed that earlier in the introduction to dividend. So now company wants to declare dividend of how much? 300. Net profit is 500. Is there adequate profit to declare dividend? Yes. Answer is yes. Correct. Now company wants to declare dividend of 700, but net profit is only 500. Is there adequate adequate profit for dividend? Answer is no. What is there is only 500, but I still need extra 200. From where I will get that 200, we will discuss. Third case, net loss is 100. Net loss 100. I am writing in bracket just for you to understand better. Company wants to declare dividend of 300. Can they declare? Answer on face is no. But what if all the previous years I had profit, and in my balance sheet, this is my P&L, and in the balance sheet I have a reserves and surplus positive of 5,000. Are you following? Then can I use it? Yes. So look at this. In the first case, when net profit was 500 and I want to declare 300, I can declare using current year profit itself. In second case, when I want to declare 700, from current year I will take how much? 500, and balance 200 I will take from my reserves and surplus. And in third case, when I have a loss, I will take my full dividend, whether I want to declare 300 or 700, I will take it from my reserves 5,000. So this whole section 123 itself is split into two parts. The two parts are more like they are asking you a question: is company having adequate profits or not adequate profits? Are you following, guys? Understanding? Now in this case, we saw 3 cases over here. I gave you 3 examples. Which is adequate profit? The first case, where the profit is 500 and I want to declare dividend of 300. Are you following, guys? Are you understanding? So I will see if I have adequate profits or I don't have adequate profits. Are you following, guys? For this, provisions are different. Not having adequate profit, provisions are different. Are you all following, guys? Are you all with me? Clear? Understanding? Okay. Now, just now you told me either I will use 500. What is 500? Current year profit. What is 5,000? Reserves. That is nothing but previous year profit. That means in both adequate or non-adequate profits, in both cases, from where I will use money to pay dividend, first option will be current year profits. Second option will be previous year profits. Correct? Or third option, here if you see, in the first case, we used only 500. Do you all agree? In second case, in the last case, I used fully 5,000 previous year. But in that 700 case, we used current year and we used previous year. So third option says you can use a combination of both. I am writing here running notes, guys. Clean notes is there in the material. I will again highlight and show you that time when we are revising. So for me, the sources of declaring dividend, whether it is in any way, whether I have adequate or don't have adequate, what is my source? Current year, previous year, or combination of Are you all with me, guys? Understanding? So that's what we have over here. That's what we have over here. Look at this. Yeah. Sources for declaring the dividend. Okay. If you look at the sources, like what I mentioned over here, profit of the current financial year or profit of any previous financial years, or both one and two, combination of current and previous year profits. So previous year is nothing but what? Free reserves and balance in P&L account. Are you all following, guys? Understood? Clear? Now, sometimes for a certain companies alone, no. For certain companies, they will say central government or state government will pay dividend. They will guarantee and they will say they will pay dividend, because for those companies it will always be loss making. So fully it's loss. How will they pay dividend? For example, if you take a company like BSNL, it's fully loss making. Why, sir? How many of you in this class are using BSNL? One student, two students are using out of 30. Online live maybe another one or two. Rest of you are using Jio, Airtel, whatever. Correct? Yes. Because number of people using BSNL is going to be loss. If it's a private company, they will close down by themselves. But because it's a government-backed company, government will contribute. So shareholders of BSNL is who? Government. So shareholders of government company is government. So if they pay dividend, who will get the dividend? Government. That means in India, most of the government companies are loss making except a few. Correct? Now how will government get profit? How will they get dividend? They will not get dividend, guys. So in that case, what will happen, guys? In that case, what's going to happen? Government is kept a provision by themselves, whereas guaranteed by central or state government. Look at this. Money guaranteed by central or state government for payment of dividend. One more reason, not only government companies, even for some private or public companies, government will tell, I will pay dividend for you for the first 5 years. I will contribute. Why? Sometimes government will tell, go set up the business in backward areas. So when you set up the business in backward areas, what will happen? That area cost will be higher. So I have to put road also over there. I have to do a lot of infrastructure that company themselves will do. So they will not be profitable. So government will tell, no problem. You go set up business in backward area. So backward area will develop. I will give you dividend for the next 10 years. Are you getting it, guys? So in these cases, money guaranteed by central or state government. Sir, for exam, what to remember, sir? For exam, what you should remember is, for paying dividend, the source is what, guys? Current year profits or previous year profits or combination of both or central or state government. Now, there is a very important provision over here. So far not tested, and everybody will just mug up this unless you know the logic, but you guys know the logic. Read this. I can use profit of current year only after providing for depreciation in accordance with Schedule 2. I told you we have 7 schedules in the Act. Schedule 2 talks about depreciation, and even previous year profit can be used after providing for depreciation in accordance with Schedule 2 and remaining undistributed. Meaning, come back to this question. Net profit is 500. Imagine gross profit is 1000. Okay. Imagine is how much, guys? 1000. Now, imagine all the other expense is 500. That's why net profit is 500. They are saying you have to mandatorily in other expense include depreciation. Then only this can be used for paying dividend. If depreciation is not provided, then you please provide depreciation. For example, if depreciation is 100, then you provide another depreciation of 100 and net profit will be only 400 is the source for dividend. Are you following, guys? Understood? Can someone tell me logic of why the act is saying very specifically in section 123, dividend depreciation has to be reduced? Why? Now, follow very carefully. I am an individual. Okay. all the money that I am getting, if I start spending it off now, if I start spending all the money, what I will do in the future when there is an emergency? What I will do? For example, all the money that you have paid for fees, I can't spend it fully. I have to keep a proportion for paying the rent. This camera may not work. This TV may not work. That time I have to change it off. That time I need to keep this money only, one small amount. If I spend everything, that time I will struggle off. Now, I told you in the introductory class itself, depreciation, saving, correct? Okay. I told this in the introduction of accounts, but in the app, I will be uploading introduction of accounts and law for everybody as common. Or if you're only a law student, go to YouTube, look at the advanced accounts free lecture, first one demo, where I would have explained for 30 minutes why depreciation is a saving. I don't want to teach it again now, guys. Okay. Most of students watch accounts and law, but if you're watching only law, you will be blown to see there's a 30 minutes lecture of mine only, guys. In the introduction, in the app, you can find the introduction lecture. If you're watching recording, depreciation is a saving. Now, that's why there's now, if you connect that logic with this chapter, you can see because depreciation is a saving, only if you save, you can pay your shareholders. Otherwise, you will struggle to replace assets in the future. Are you getting it? Now, are you able to connect that introduction to this? Understanding, following, that's all. Sir, for exam, what is important, sir? Sources for declaration of dividend under section 123. First section, 123 says I can pay from current year, previous year, combination of both, money guaranteed by central or state government, and I should reduce depreciation before using current year or previous year profits. Till here, are you all clear, guys? Okay. So now we are at the part where sources are done. Clear, guys? Understood? So adequate profits. If I have adequate profits, I can use any of these. Correct? Current year, previous year, combination or central government. Now, let me give the next example. Let me give the next example for you to understand. This scenario, whenever I am going to touch my reserves and surplus. For this, let me give you an example to understand this. Okay. Let's take one example. We have your name, Gokula. So we have Gokul. Gokul, after clearing CA, okay, after clearing CA in the first attempt, he cleared a CA final with an all India rank. Okay, that's what everyone's dream is. Okay, so you cleared CA with an all India rank. First job itself, his salary is 24 lakhs per annum, 2 lakhs per month. First job at the age of 22, 23, 24, whatever, whenever you cleared this. Okay. Then he worked there for 1 year. Then one more company called him, hey Gokul, come and join my company. I will give you double the pay. So he got 48 lakhs in one more company per annum, and he jumped to that company the second year itself. Okay. One pattern I am seeing today, which is there in the last 10 years, including me. I am not talking only about you guys, but including me. But I am seeing that happen more frequently now. Okay. That current youngsters, we'll call it as Gen Z or not, but current youngsters, you can see that they are not staying in one company for more than 6 months to 1 year. They are jumping every year on year. I don't know if you're noticing it, but that's the truth. If you see your parents, grandparents, they used to work in the same bank for 30 years, same company for 20 years. They will complete the silver jubilee, golden jubilee. I'm not saying that is right, this is wrong. Okay, both is right based on who you are. But currently, I'm seeing people jumping much more faster. Even me, I used to work in a company for 2 years and then I shifted. It's fine. But now I'm into teaching for last 7 years. I have a mental health startup for last 5 years, which I'm doing consistently. But currently, I'm seeing people jumping too often. That's okay, but take your time and figure out. Finally, within the first 5 years of your professional career, you have to decide where you are going to stay for long term. Okay, the first 5 years after you start working, it's okay to jump because you have to figure out what you want to do. But after 5 to 6 years, before you hit 30, you have to find out what you're going to do in the next 10 years. Okay, come back to Gokul's example now. Second year, he got 48 lakhs. Now in third year, what came? AI came. After AI came, suddenly Gokul is getting a mail. Sorry, Gokul, your work, AI can do it now. So you will not be there anymore. You lost your job. Don't get scared, guys. It's example. Okay. This is happening now only for software engineers. I don't know if you're seeing the news. Some people who are loyal for a company for 20, 30 years in big companies like Google, Microsoft, in 1 day's notice, job is gone. Why? Thank you, AI. Okay. Now it is already started to happen. First impact is whom? Software engineers. They are the first impact. Okay. Now, Gokul, both the years put together, what is the money he has? How much? 72 lakhs. In these 2 years, he spent lavishly. Of course, no. First salary in lakhs he spent. After spending, let's say 32 lakhs, 22 lakhs he spent, guys. Okay, he spent how much? 22 lakhs in these 2 years for himself. He has a savings of reasonable 72 lakhs. He spent 22 lakhs for himself. 50 lakhs he has a savings. Now in third year, Gokul is jobless. Gokul is jobless. He's looking for a job. He's not getting a job for this pay. They are giving him 1 lakh per month, 50K per month. So he's still searching. Keep this in mind. Now is Gokul having current year profits? Current year salary? No. Now in third year, for full 12 months, Gokul is jobless. Okay. Gokul is what, guys? Jobless for but still he has 50 lakhs savings. He'll start spending these savings. Are you all following the example, guys? Now, Gokul's friends are calling him for a Europe trip. Calling him for a Europe trip for 1 month. Come down, let's go. All his friends are in job. Come, let's go for 1 month. We will see full Europe and come. For 1 month, we will stay in some luxury hotels in Europe. Okay, Gokul, fine. How much it will cost? Luxury travel, business class only, he will go flight. All his friends are going. Luxury travel, 1 month Europe and come back. How much it will cost? 20, 30 lakhs minimum. He can finish Europe trip in 5 lakhs also. But he is going for luxury trip. Okay. Fine. Okay. Now, in this 20 to 30 lakhs, will Gokul spend this? If you are Gokul, will you spend this in third year when you don't have a job? Yes or no? Answer is no. But I have 50 lakhs. No. Half only I am using. No. Why can't I spend? Why? If you had a job in third year where your salary is still 48 lakhs, will you spend now? Yes, definitely we will spend. Correct. That means human psychology is when you don't have current income, even though you have a good savings, you will spend cautiously. Correct. Now you tell me, how much of this 5 lakhs now when you don't have a job will you spend for a trip? How much of the 50 lakhs you will spend for a trip? Europe trip only. You want to go for 1 month and come. How much you will spend? 5 lakhs. Yeah, which is roughly about 10% of 50 lakhs, guys. In 5 lakhs, we can go to Europe and come back. 1 lakh tickets is enough for up and down. Another 4 lakhs enough for 1 month easily. If you put backpacks, stay in hostels, not enough. Okay. Now, 5 lakhs trip your friends are calling you. You don't have job. 50 lakhs saving. Will you go? Yes or no? Yeah. Hello. 1 month Europe trip. If not 1 month, 10 days trip for 5 lakhs. Will you go and come? Very much yes or no, guys? So, keep this logic in mind. Now, come back to our dividends chapter. Even though I have 5,000 reserves, current year if I have loss or if profits are not sufficient, I am in not having adequate profits. Now, human like Gokul will be able to think with sixth sense and say, I will not spend the full money. Correct? But company, can it spend? Can it think like that? No. So, if I have not adequate profits, there are actually 4 rules or 4 conditions to follow, but I will put it as 3 rules and one is a sub rule or sub condition. Are you following? Clear, guys? These rules will be derived from Gokul's example for you. Of course, you may already know it, but I'm only addressing students studying for the first time. Now, you tell me, guys, how much money will Gokul use from his savings? Around 10% of. Same way, for a company, they are saying if money is not there, how many rules I told you, guys? How many rules? This is which section? 123. 123, 3 rules. This is also called as Rule 3. Rule 3 has 3 rules. Rule 3 of, I told you in the introduction lecture, this is what chapter? Actually, chapter name is what I wrote in the starting. Declaration and payment of. So, I told you in the introduction, rules will be what, guys? Chapter name. So, it will be declaration and payment of dividend rules. Are you following now? Easy to fill it, guys, in exam now. So, it is Rule 3 of declaration and payment of dividend rules. I'm not writing again because it's the chapter name. Correct? Now, the introduction is matching over here. So, in this we have 3. How many rules? 3 rules. Quickly, how many rules? What is rule number? Rule 3. What is section number? 123. Are you following? So, section 123's rule 3 has 3 rules. Easy to remember. Clear? In this, how much money will Gokul use? I told you. So, that's called usage rule. It's a name, it's actually not name in the rule. It's a name colloquially given by all faculties and accepted in the industry. So, usage rule, I just now told you, if you have savings of 50 lakhs, how much you will withdraw, guys? 10%. So, usage, you can withdraw 10% of what? For Gokul, 50 lakhs is saving. Correct? For company, what is the saving? Reserves and surplus along with the capital I kept. See, what is the total saving of company? Of course, it's going to be reserves and surplus, but I also invested some money. No, that money also is there in company. What is that? Paid up share capital plus not all reserves. We will call it as free reserve. So, how much you can use from your savings is 10%, and that's why in Companies Act and rules also, how much you can use is 10% of paid up share capital and free reserve. Are you following? Getting the logic? Come back to Gokul's example. Gokul is not going with his friends. Gokul's girlfriend is calling him, come, let's go for a trip. Okay. Now, he'll tell no. Can he tell no? 1 month she's saying, come, you're having no job. I'm also having no job. Let's go to Europe for 1 month. Forget all this AI. Let's relax for 1 year and come back. Now, girlfriend is saying, how much balance you're having? He's saying, I have 50 lakhs. Okay, 1 month, fine. It will cost 20 to 30 lakhs for both of us. Now, will you go, Gokul? Hello, will you go? Yes, sir. What you're saying, no. Then she will leave you and go. Okay. So, just, okay, so he will go. No, girlfriend is calling. He's saying, anyway, I'm a CA. I will get a job. I will come back and deal with it. I don't want to miss this opportunity. I will not get this opportunity again. So, now he will go. Will he spend full 50 lakhs, sir? No. If he spends now, who is he? What term we can tell? Blind, correct? Okay, for whatever. Okay, you decide the terms, guys. Okay. How much he'll spend at least? 20-30 lakhs he'll spend. At least with common sense, if Gokul has. After going, he'll at least keep a balance of how much in his savings. For 10 lakhs at least he'll want. Or at least some 20 lakhs he should keep when he comes back. If he spends full 50 lakhs, we can't do anything, guys. When he comes back, he has to take care of himself. Then the girl also will leave. Now what Gokul will do? That's it. Okay. So he will spend 20 to 30 lakhs in this case. So the rules are saying in some cases, like the girlfriend case, company has a need to pay dividend. For example, when COVID came, I had to pay dividend because I paid in last 10 years. My shareholders are expecting. First year I paid. Thinking COVID will get over next year. It got over. No. 1 more year I had to pay. So 2 to 3 back-to-back years, even though I was loss-making company, because I have heavy profits, I ended up paying because my shareholders are expecting that my shareholders are like my girlfriend, I have to pay. Then the rules are saying, okay, you pay, but there has to be some balance left in savings. We call it emergency fund. We can't finish the savings. We can't make it zero. If you make it zero, there are some words in memory. I can't tell those words because recording is going on. Okay. You know that better than me. Okay. So, in balance rule, they are saying the balance in reserves and surplus. My savings are what? Reserves and surplus. So, my balance in the reserves and surplus should be at least Here, how much you wanted? 10 or 20, correct? It should be little higher. Can I keep 2 lakhs balance? What you can do with it? So at least I need some emergency fund, one hospitalization, one bill, hospitalization for some emergency, 10 lakhs will get wiped off, correct? So they are saying the balance should be at least 15%. How 15? We thought 10 or 20, keep average 15. At least 15% of paid up share capital. Are you following, guys? Look at this. So the balance should be at least 15% of paid up share capital. Are you following? I will show this with numbers. Don't worry, we have a sum to solve. What is the balance in reserve? This is balance in reserve after paying dividend. Correct? See, it is balance after spending for the trip only. No, I'm saying 10 20 must be there. Correct? So after you pay the dividend, the balance should be at least 15% of paid up share capital. That's my main capital. See here, sir, why are we not doing paid up share capital plus free reserves? Why we are not doing? This is like an emergency fund, correct? Like an emergency fund. At least 15% of my capital has to be there. Are you following, guys? Understanding? Capital is what I contributed in the business. At least 15% should be there in my reserves. That means, for example, if my paid up share capital is 100 lakhs, 100 crores, whatever, reserve should be at least 15 lakhs or crores after paying the dividend. Are you following, guys? So we saw 2 rules. Are you able to connect with Gokul's example, guys? How logically it's drafted in the act. So usage, I will use 10% of paid up share capital and free reserves. Balance will be at least 15% of paid up share capital. Is this clear, guys? Now, next is how much can I declare, sir? How much can I declare? We call it as the rate rule. Now, rate of dividend, correct, is what I am declaring in the past, what I am declaring now. Come back to Gokul's example. Come back to, see, Gokul only is deriving this chapter for us, the rules. Now, Gokul in his life, all the trips in his life where he has gone, he has spent on average 1 lakh, 2 lakhs, 5 lakhs, let's say 4 lakhs, like that. So suddenly if you're going for a trip, will you spend 50 lakhs? So nobody does that, correct? Normal human sense. So you will, when you're increasing the trip expense, maybe this year 5 lakhs, next year 7, next year 10, if your income is increasing. Otherwise, it will be within the same limit for all the trips, that's your budget. So here also they are saying the rate of dividend that I am going to declare, no, the rate of dividend, last 5 years, I am declaring 10%, 12, 9, 12, 14, 10. Suddenly this year, can I declare 30%? That too when I am using my savings? That means something is wrong, correct? So they are saying company cannot think. We are thinking and drafting for Gokul Private Limited, for the company. Here the rate should be average of last 3 years. The maximum rate. For example, last 5 years, my dividend is 10%, 12%, 14%, again 10 and 12%. Now I will take what? Average of last 3 years only. This is my last 3 years of, assuming it's last 3 years. So I will do 14 plus 10 plus 12 divided by 3. How much you are getting? 12%. Are you getting it, guys? So the rate will be maximum 12%. I can keep 10, I can keep 8. So the number I am going to declare in the next year, which is 12 over here, should be a correlation to the previous year's dividend, and that's why they are saying average of last 3 years. Are you all following, guys? Understood? Are you all with me? So what are the 3 rules? Now we are in which section, guys? Which section? 123. Rule 3 has how many? 3 rules. When I will use this, if company is not having adequate profit. Not having adequate profit means basically whenever I'm using my previous year profits. Are you following, guys? Whenever I'm using my previous year profits, I have 3 rules, and the 3 rules in the same order. First is Rate. I taught you in different way. Now rate is the first rule. Average rate is maximum last 3 years average. Usage, I can withdraw 10% of paid up share capital and free reserves. And last, balance after deciding the rate and paying. The balance in reserves and surplus after paying dividend should be at least 15% of paid up share capital. Is this clear? Are you following, guys? That's what we have in the book. Now let me quickly read it over here, guys. It's the same thing I told you. Now I'll just quickly read like another revision for you. Look at this. Declare dividend after following procedure. Rule 3 of the chapter name. What I told you. Declaration and payment of dividend rules 2014. Same thing I told you guys in introduction. Here will be 2014 in common, in general. You don't remember na, write 2014. You have a doubt na, don't write the year. Just write the rules and chapter name. Are you following, guys? Condition 1, condition 2, condition 3. Correct? Condition 1 is what? Rate. That's what I have given. The rate of dividend declared shall not exceed the average of the rates at which dividend was declared by the company in the immediately preceding 3 years. So when you learn the concepts in the class where I have spent the time, I will tell you average rate of last. Average of last. When you write an exam, you will write as much as possible, as closer as possible to the terms in the book. The rate of dividend declared shall not exceed average of the rates at which dividend was declared by the company immediately preceding 3 years. Are you following, guys? Understood? Clear? Don't make me repeat this 5 times. Is that clear, guys? What I'm showing you in the book over here. One sample also. Last 3 years by 3. Clear, guys? Understood? Next. Yes. How can we increase the dividend rate? So Paul's doubt is, sir, how can I increase? Now, if I have adequate profits, do I have rules? That means current year profitable, you can keep any rate. You can keep 10%, you can keep 20%, you can keep 30%. Are you following, guys? If you want to increase average, every year you keep declaring higher amount. So future, if you have a loss, average will be higher. Understood? Got it, guys? Clear? Everybody? So come back over here. Let me read the second thing which I thought there are still some more points. The total amount to be drawn from such accumulated profits shall not exceed 10% of its paid up share capital and free reserves as per the latest audited FS. Of course, latest balance sheet I will take. Are you following, guys? Go to third rule. Okay. The balance after such withdrawal shall not fall below 15% of the paid up share capital. In simple words, free reserves minus amount drawn for payment of dividend should be more than or equal to 15% of paid up share capital. That only I showed you numerically over here. Understood? We have a sum also, don't worry, we will do that. Clear, guys? Are you all with me? Understanding? Hello? Okay. Now, this usage rule and rate rule has one sub point to know. In rate rule, sir, in last 3 years, dividend declared is 0, 0, 0. What to do? Average also is 0. That's it. Are you following? That's what is given over here. In condition 1, look at this. I gave us note. This condition is not applicable. Why not applicable? Because it's 0. If the company has not declared dividend in each of the previous 3 years, are you following, guys? In all the 3 years, I did not declare dividend, then the rule is not applicable. Then immediately you should get a question. Sir, what if I declared in the last 3 years 12, 0, 14? Now what to do? Now what I will do? Average by 3 or by 2? By 3 or 2? Average by 3 or 2. Now follow very carefully. In school, you got marks 5 subjects. 90, 90, 90, 90. 1 you were absent. 0. What's your average? Everything divided by 5 and it will reduce, or your average is 90. You will divide by 5. Even though you are absent, You will divide by 5 and average will reduce. Correct? Yes or no? Or do we take it by 2? This concept alone, let me keep it open. I will discuss when I go to end of the chapter in interim dividend. Are you following? But this is an area that they can test. They have not tested, but keep it open, guys. If I keep, what if it's 0 again here? Now if I divide, now look at this, if it's 12, 0 and 0, if I divide by 3, it becomes 4, much lower. But if I divide by 1, then it is, still it is 12, which is right, technically. Logically, it's right if I keep it as 3, because by not declaring dividend, you cannot get a reward of taking 12%. But I will explain this to you, giving you a conclusion. When we go to interim dividend, I will give you conclusion. Okay. But for now, you remember, if all the 3 years are 0, then this rule is not applicable. That means you can't declare dividend itself. Are you following, guys? So last one thing, like this we have one more sub rule under usage rule. In some books, they will show it as 4 rules itself. Are you following, guys? In some books, my book I am keeping condition 1, condition 2, condition 3. Are you following, guys? Condition 2 as a sub condition. Let me explain that with an example. Let's say net profit is, we have net loss is 50. So I am going to use what, guys? I will use my equity share capital, let's say it's 500, and let's say reserves and surplus is 300, and then let me say my dividend that I want to declare is 50. Are you following, guys? I want to declare how much, guys? 50 as dividend. Now, how much I can withdraw from my reserves? Follow carefully. Assume 50 is the final answer, guys. I want to pay. As per rate rule, 50 is coming. Okay. Now, how much I can withdraw? This into 10%, assuming everything is free reserve. Okay. How much it's coming? 80 is coming up. Correct? See, let me show like this. As per rule 1, applying the average of 3 rates, last 3 years, last 3 rates, let's say we are getting 50 as the rate. Are you getting it? Okay, for example, let me show it to you itself. Equity share capital is 500. Correct? Imagine average of rate is 10%. So what is 10% of 500? 50 is coming. Is this clear now? As per average it is 50. Are you following? Now, this is first rule. Second rule says, I can withdraw only 10% of my share capital and reserves. What is 10% of 500 and 300? 80. We got the 80. Now, I need only 50. Can I use this full 80? Yes, I can use it. You can't use it. What you should do, before you use this 80, current year I have a loss of, how much is that? 50. That 50 also I should reduce, and balance, how much is there? 30. This 30 only I will be able to use. Are you following, guys? Understanding? That means I cannot declare dividend of 50. I can declare only 30. Are you following, guys? Why is this there? Because when I am applying this 10% of paid up, look at the logic. When I am applying this 10% on paid up share capital and free reserves, I am not considering current year loss. Correct? If you consider current year loss, reserve will automatically reduce. Reserve will not be 300, it will become 250. It will reduce, guys. So the rule says, you apply 10% on your savings. What you can use is 80, but from that I will reduce my current year loss. Balance is 30. So as per the first rule, it says I can use how much, guys? 50. As per second rule, it says I can use only. So which I will follow? 30. I will follow 30. Let me apply third rule also now. Let me apply third rule because we started it. Now in third rule, I am applying how much? I am paying how much dividend? 30 will be paid as dividend. I am paying how much? 30. So my reserves will now be reduced by how much? Will be reduced by how much? 80. Because 300 minus 50 loss. Correct? Minus another 30 which is paid. So totally 80 is used. See, totally 80 is used. One is current year loss, one is dividend. So now what is my balance of reserves? Look at this. My reserve was 300 first. My reserve was 300 first. I used 80. But how I used 80? 50 was used for current year loss and 30 was used for dividend. So what is my balance in reserves? 220. Now what is my share capital? 500. Check. 500 into 15%. How much you are getting? How much? That means my reserves should be at least 75. How much is there? 220. Satisfied. Now look at all the conditions. I will see all the conditions. First one, average of last 3 years. Average is how much? 10%. Applying this 10% on 500, you are getting 50. So I am thinking I will pay 50. That is the first rule to apply. Clear? Second, usage. I can maximum use only 10% of paid up share capital and free reserves. So paid up share capital is 500, reserves is 300. Maximum I can use 10%. I can use only 80. But there is a sub rule here. There is a sub rule which here says what you withdraw should be first reduced with current year losses. Are you following, guys? Reduce with current year losses. So I am coming down over here. Follow. From this 80, I am reducing how much, guys? 50, because 50 is my current year loss. Are you all with me, guys? So how much I have? That means as per second rule, I can pay only 30. I can pay only 30. So how much I will actually pay? 30. Are you getting it? I will end up paying only 30. Are you all with me, guys? Following. Now third rule is saying what? Balance after paying the dividend. Reserves should be at least 15% of paid up share capital. What is my starting reserves? 300. From that I had to reduce 50 of current year loss. And then minus 30 for paying dividend. So I have how much? 220. I am cross checking. Is this 15% of paid up share capital? What is 15% of paid up share capital? 75. At least 75 is there. Yes. Are you following, guys? So come back over here. Come back to the material. You will see in this note we finished. If dividend is not declared in all the 3 years, this rule is not applicable. Come to second rule. In usage rule, there is a sub rule over here. Let's read what they are saying in the sub rule. The amount so drawn, in our case 80, shall be utilized to set off losses incurred in the financial year in which dividend is declared, and only thereafter any dividend in respect of equity share shall be declared. So 80 minus. Is it clear? Okay. Yes. Doubt. Okay. Question by him is, sir, should I check all the 3 conditions or any one? You have to check all 3. Rule 3. For me to pay 30, see, if I followed only first rule, I would have paid 50. So because second rule came only, it came to 30. And again, for me to pay 30, it's still not finalized until I check if I pay 30, is the balance sufficient? 15%. If it is not sufficient, then third rule will reduce it even more. Are you following it? Are you understanding? Clear, all of you guys? This is how you will apply all these 3 rules in the exam. All of you with me, clear? Understanding? Hello? When will I apply this not adequate rule? If previous year, sorry, if current year profits is not adequate to pay the dividend that you desire to pay, or if I am having losses and if you still want to pay, these 3 rules are applicable. What are these 3 rules, guys? First is usage. Sorry, first is rate rule. Rate rule, average of last 3 years. In that, if last 3 years dividend is not declared, then rule is not applicable. Second, usage. Maximum I can withdraw 10% of paid up share capital and free reserves. After I withdraw, I will reduce with current year loss. Clear? Third is balance rule. The balance in the reserves and surplus after withdrawal and after paying of dividend should be at least 15% of paid up share capital. So why it's drafted like this? Ask Google. That means ask yourself. When you have savings without current income, you will not use the whole thing. I connected these three rules with the Gokul example of logic. Logic as to why rules are like this. Why 10% only is withdraw? I can withdraw, sir. Because when you have savings of 50 lakhs, a normal human being will be okay to spend 10%, 5 lakhs for a vacation or trip. Are you following, guys? Because dividend is not a mandatory need, it's a luxury for shareholders. Are you understanding? I'm not talking about when profit is there, it's need. When loss is there, if I'm still giving dividend, it's a luxury. Are you following? Clear? With this, almost more than half of section 123 is done. Like, look at section 123. 123 talks about sources. What are the sources? Current year, previous year, combo, money guaranteed by central or state government. Adequate, not adequate. In not adequate, we have these three rules or three conditions. Are you following, guys? Last few more things before section 123 will come to an end. Few more points, let me explain. Once dividend is declared and approved, okay, we have a timeline. I will read that along with the next section. But once dividend is declared and approved, it has to be transferred to a separate bank account within 5 days. So here, last point, I will explain the logic when I go to section 124. No, next section. That time I will explain the logic. For now, once transfer amount payable as dividend to separate bank account within 5 days of declaration. That word is missing, I will add it. Within 5 days of declaration. Are you following, guys? Clear? Understanding? Hello? Within 5 days, you will transfer to the separate bank account. Why? When I go to section 124, I will explain it. Is that clear, guys? Understood? Within 5 days of declaration. Next, other points. Let me explain one by one. Till here, are you all understanding? Those who are studying first time, are you understanding? Everybody clear? No, other 4 small points with that section 123 will get over. Now, think of this logic. Can you go for a trip when you have a loan and interest is not paid? Will you do that? First I will pay others, then only I will spend for myself, correct? Like that, company in its balance sheet, sometimes in borrowings, this is capital, this is debt. In that debt especially, there is something called deposits. We have a separate chapter for this. I am not discussing that chapter now, but that what is deposits is nothing but members, shareholders or public. You guys can put deposit in bank FD of, correct? Instead of keeping in bank FD, sometimes you can deposit in a company itself. And because bank will pay you maybe 7% interest. If it's a company, they will pay you 10% interest. For example, Bajaj Finance, Muthoot Finance, NBFCs. Sometimes you can put your money as deposit, not in a bank, same FD in a company. Are you aware of this concept? That only we have a separate chapter. I am not discussing that now. Okay, but let's say company has, that means company has deposit of, let's say 1000. Now on this deposit, company has to pay interest to public or members of, correct? Yes or no? I am the company. Gokul invested money in me, not in shares, in deposit. So I have to pay him interest. Now, without paying that interest, can I pay dividend to shareholders? No. The P&L itself, you saw logic first. In any P&L we saw above, first you will pay other expense. Then only you will get net profit and pay off. So like that they are saying, look at this. Any company which fails to comply with section 73 and 74 is nothing but deposits. So later, not now, after 4 or 5 chapters, I will teach you something called deposits chapter. For now, don't stress about it. In that chapter, if interest on deposit is not paid, you should not declare dividend. Failure to repay deposits. Nothing great in this. Are you following? But that means if you don't pay interest on loan, if you don't repay loan, you can still declare dividend. Why is the law not that strict for loan? Loan is with respect to bank, only one entity, which is the corporate. But deposit is for individuals. Are you following, guys? It's public. So they are only including deposits over here. Are you following, guys? Clear? Understood? Next. I already told you. Before declaring dividend, you have to set off what? Current year depreciation. Current year depreciation and current year loss. They are also saying if you have, that means if you adjusted current year loss and current year depreciation, you should have adjusted even previous year loss and depreciation. Assumption above over here, this profit of any previous year or current year is after providing for depreciation in that year. But they are also saying just in case, previous year also if you have any loss or depreciation, that also you have to adjust. Are you following, guys? Okay. So look at the second point that we have. Before declaration of any dividend, previous year losses and depreciation. In above provision, what we saw? Current year loss. So previous year loss and depreciation not provided in the previous year also to be set off. That means only after previous year depreciation and current year depreciation, savings is done. After previous year and current year loss is set off, you can provide. Are you following, guys? Next. Gokul is there. Okay. Where's Gokul? Gokul saving 0. Why, sir? 0. He got 72 lakhs. Sorry, 84. Some lakhs he got. 72 lakhs he got, guys. He spent fully in 2 years. How, sir? Purchased Mercedes car, iPhone, everything he purchased, thinking he will get job next year. He will get salary again. Okay. Now his savings is how much? 0. Okay. Now Gokul also purchased the house on loan. Okay. 72 lakhs you can't buy a house, guys, but he purchased on EMI basis. Okay. When he purchased, that house was 1 crore. For him alone only, no. 1 BHK. Even if girlfriend is there, enough. 1 BHK enough for him, correct? He is paying EMI. He purchased in center of the city, Mumbai or Delhi or Bangalore. So that house, within this 2 years, increased to 3 crores. Gokul is lucky. He has job also, girlfriend also is there. House he purchased became 3 crores. He will pay EMI only for 1 crore. But savings is 0. He's taking a lot of risk, spending it fully. Now, suddenly AA came. Job gone. Same example. Now his girlfriend is calling him for trip, 20 to 30 lakhs. Can he go for the trip telling himself, if I sell this house for 1 crore, I will get 3 crores. I have plus 2 crores surplus, revaluation gain. If I sell the house, he hasn't sold, but if he sells, he will get 2 crores. With that, I can repay the loan. I can do lot of things. And can he do something like this? Answer is, are you following? That's why a company, they are taking only free reserves for declaration of dividend. Any gain which is notional or unrealized cannot be used for declaring dividend. Look at this. Any amount represented by unrealized gain or notional gain or revaluation of assets and any change in carrying amount at fair value shall be excluded while computing profits. Are you all with me, guys? Understanding? So what is all these? Let me explain this one by one. Unrealized or notional gain. Forex gain, for example. What is this? Unrealized or notional gain. In my balance sheet, my let's say my trade receivables is $100. When I book the entry, it is at 90 per. Now it became 95. But party is yet to pay me. Party is yet to pay me. So when he pays, he will pay me extra 500. But has he paid? No. So can I take this extra gain, which is notional, unrealized? Can I take it for paying dividend? No. Are you following, guys? So this unrealized gain or notional gain cannot be used, and also revaluation of asset cannot be used, and change in carrying amount of asset and liability at fair value. We will learn about this more in accounts when you do AS 13. For example, simple thing, investments will keep fluctuating up and down. Gold value and silver value. I've invested in silver, value will go up, value will come down, value will go up, value will come down. So that changes in carrying amount of asset or liability should be excluded. What they're trying to say, take only the free reserves or profits you have earned in ordinary course of business. Understood? Free reserves that you have earned can only be followed. Clear? Understood so far? Hello? Are you all with me, guys? What are these extra special conditions? Once dividend is declared, transfer separate bank account within 5 days. If I have default in deposits, can I declare dividend? No. What reserves to be used? Free reserves. Can I use this notional gain, unrealized gain, all those things? Are you following? Clear? Last thing. These are 3 rules. Okay. When should I use this? When should I use this? When you have not adequate profits. This includes not adequate profits, includes 2 things. One, if the company is loss, or second, even if the company is profitable, but it's the case where I showed you 500 is the profit, but I want to declare, correct? In both these cases, I am a loss making company or I have profit which is not adequate to pay my dividend. I will use these 3 rules. Now follow very carefully. I told you about BSNL during our discussion, correct? BSNL is a government company, correct? Which is a 100% held by central or state government. Applying the provisions of dividend, BSNL has loss for last 10 years. Correct? Do you all agree, guys? That means they are now in the loss bracket. Now, if they want to declare dividend as per section 123 rule 3, they have to follow these 3 rules. Now, as per these 3 rules, can I withdraw 10% of paid up share capital and free reserves? Can I have a balance of reserves, 15% of paid up share capital? Not possible, because everything is in negative. Loss means reserves will be negative, no. Now imagine a scenario for BSNL where, follow carefully, paid up share capital is 100, reserves is 500 in negative. So what is my savings now? Negative 400, correct? Now, how can I withdraw 10% of negative 400? Does it make sense? No. Mathematically also doesn't make sense. Logically also no sense. Do you all agree, guys? Hello, are you all with me? So, for BSNL, even though it is a loss-making company, the provisions are saying go and read the 3 rules. If I come for the 3 rules, I cannot apply any of the rules because they are saying average of last 3 years. Okay. First of all, there is no average of last 3 years. If I want to declare this year also, my reserves are negative. What they are saying, balance in reserves should be at least 15% of paid up share capital. How it will be? My reserves are negative. Balance is negative. It will become more negative. So, that means BSNL can never declare dividend. So, who is framing the law? Government. BSNL is a government company. So, I am framing a law which is against me. Will you do that? So, what they are saying, a government company is saying, we are loss making only. I will pay dividend from the other funds that I have in the government. Don't apply these 3 rules for a government company. Are you getting it, guys? But not all government companies. They are saying only if the 100% paid up share capital is held by central government, state government, or combination of both. Sir, first of all, what is government company, sir? I don't know, sir. You are saying government company. Follow carefully. This is a company's balance sheet. We have paid up share capital. I will teach it separately. But if this paid up share capital 100% is held by central government or state government, for example, BSNL. But today, LIC or IRCTC are not government companies. Are you following this? Are not government companies because no, they are government companies, but they are not 100% because for these two companies, roughly around 90% is held by the government and 10% is available for public in BSC and NSC. This is LIC and IRCTC is still a government company only, is still a government company. See, we have government company definition in a separate chapter, guys. The definition of government company is if more than 51% of paid up share capital should be held by the government. Should be held by whom, guys? Government. Are you following? Should be held by government. But here they are saying if 100% is held by government, for them these three rules are not applicable. They can declare any amount of dividend. So come and read this last thing. The condition prescribed by rule 3 are not applicable to a government company in which 100% is held by central government, state government, or combination of both. Are you following, guys? So then why not other government companies 90%? Anybody logic? Sir, why not? That means, sir, why not LIC or IRCTC? They are also loss making only, no. Why can't I take them? Why the draft is done in such a way only for 100% paid up capital? Because individuals? No. Because when the act was drafted in 1956, old act, and even in 2013, at that time, all the companies of government were actually 100% held by government. So when they drafted it, all the government companies was 100%. Only now they are slowly releasing. If you remember, in 1991 only, we had globalization, liberalization, and privatization. Before that, every government company was fully held by government. So when this law was drafted, this provision made sense. It was applicable to every government company. But today, it's not applicable because not applicable to all the companies, because some companies government has released from 100% like LIC, IRCTC, and they have made it 90%. Are you following? That means maybe in the coming years, this 100% might change to 70 or 60 or 80. Now leave it, guys. Are you following, guys? A potential amendment area, someday in the future, when they realize, they will change it. Are you understanding logic? Or in funny way, if you want to remember this for exam, I can tell government will make rules, but rules are applicable only for public and not for government. Understood? License, if you don't have, police will catch you. But if police is not having license, who will catch you? No one. So in a funny way, if you want to remember this, for 100% government company, rules are not applicable. Are you following, guys? Correct only, no. Have you ever seen politician arrested? When rarely. That is because of. Have you ever seen center? See, people in power, are they arrested? No. When you lose power, opposition will come and catch you. They will put you in jail. That is happening, guys, everywhere. Andhra Pradesh, Telangana, Tamil Nadu, North India. I am in power, I will arrest other party. Once I lose power, they will arrest me and put inside. That to how long they will stay? They will come out very soon. Okay. So rules are not for government. Clear, guys? With this, we are done with section number 123 in detail. It took us about 1 hour and 10 minutes. With this, full 123 is fully done. Clear? Are you all understanding? Hello? Clear? Following, guys? Any doubts? Okay. Anybody wants to become politician in the future? Here? Praveen, super. Okay. Done. Yeah, it will be fun. 100% it will be fun. Okay. Done. With this, we are done with section 123. Next section 124, other things I will take in the next video for recording students. Okay, now we are in section 124, unpaid dividend account. We finished 123 in detail. You understood that? This section will give you whole summary of the chapter. Imagine this green dot is where dividend is declared. That is the point of time where dividend is declared. After that, the first thing is dividend has to be transferred to a separate bank account within 5 days. Within 5 days, we will transfer it to a separate bank account. For example, if company is having the full bank balance in ICICI Bank, then I will transfer to some other account, HDFC, SBI, or within ICICI, some other account. Are you following, guys? Why? Because now I have an obligation to pay this to all of you, correct? So I have to keep that money separately within 5 days. But I have to pay within 30 days. Are you following, guys? Now it is not 5 plus 30, it is 30 including 5 days. That means I have to transfer within 5 days, and if I transfer within 5 days, within the next 25 days, I have to make the payment. Are you guys following? Understanding? So again, repeat with me. It will be paid within 30 days. It will be paid within 30 days, and you will transfer within 5 days to separate bank account. Later I will tell you what is what section, guys. For now, forget about section number itself. This is the overall timeline of dividend chapter. Okay. So once I declare separate bank account within 5 days, you will pay within 30 days. Now, if it is after 30 days, two things can happen. After 30 days, two things can happen. One, it is not paid. Whose fault is it if it's not paid? Company's fault. It's not paid, or it is not claimed. Why it's not claimed? Gokul is now in Europe. Okay. He's on a vacation with his girlfriend. But that time only dividend came to his house. It is in the post box. Dividend warrant like DD, it came. Olden days and all, they never used to transfer to bank account directly. They used to send it to you in courier. You have to take the DD, we call it as dividend warrant, and you should go and deposit in the bank. Of course, many will miss out. So if it's not paid or not claimed within 30 days of declaration, then what they are saying, within the next 7 days of expiry of 30 days, you will be transferring the whatever balance is not paid or not claimed to an account called unpaid dividend account. For example, guys, with me, let's say company declared a dividend of 100 crores. Okay. In that, 80 crores is paid. Remaining 20 is either not paid or not claimed, that I will transfer to a separate account called unpaid dividend account. Now, is this another separate bank account? This will be a ledger transfer. It will be a ledger transfer. I will transfer to another ledger in my liabilities called unpaid dividend account. Sir, I am not understanding, sir. When dividend is declared, what entry I will pass? I will P&L account debit, or reserves and surplus I will debit, correct? And then I will write to dividend payable is going to be my first entry, correct? The second entry will be after 30 days, if you have not paid this fully. After this, if you have paid, for example, this is 100, correct? Do you all agree, guys? Do you all agree? Once dividend is paid, entry will become dividend payable to bank, correct? How much? Let's say 800. Now the dividend which is not paid, we will transfer dividend payable to unpaid dividend account. How much, guys? 200. Are you following, guys? So the first entry of payment of dividend should happen within 30 days. Sir, I am transferring money to separate bank account within 5 days. No. For that, what entry? No entry. Why will I transfer? I will pass entry bank to bank. That entry will be within 5 days. If you are seeing, that entry will be what, guys? Bank to bank, because I am transferring from one account to an other account. That will also be for the full amount. Are you following, guys? That also be for the full amount of 1000. Are you getting it, guys? Hello? Are you all with me, guys? Understanding? So again, follow, guys. Once dividend is declared, I will pass this entry. Reserves and surplus to dividend payable. Then within the 5 days, I will transfer to a separate bank account. Within 30 days, the whole thing should be paid. Dividend payable to bank. And after 30 days, if you don't make the payment, not paid or not claimed, I will transfer to unpaid dividend account. Not relevant for exam because they won't ask entries in law. I'm just showing you entries to connect better. Are you all understanding, guys? Fine. Come back over here. So money will come to unpaid dividend account within 7 days. After that, what will happen? Within next 90 days. Now, is this 7 including 90? No. It is 7 plus 90. Within the next 90 days, after money has come into the unpaid dividend account. Now, money should come to unpaid dividend account within 7 days. Not exactly on 7th day. For example, follow. I transferred to unpaid dividend account on the 3rd day itself. Are you following, guys? I have time limit of how many days? 7 days. But it's transferred on the 3rd day itself. Then 3rd day plus. Are you following this concept of? It's not 7 plus 90. It is within 7 days you have to transfer unpaid dividend account. The minute it comes to unpaid dividend account, within the next 90 days, what I should do? I will tell you. Follow till here, guys. Repeat with me. Once dividend is declared, separate bank account within 5 days. Then you will pay within 30 days. And then, if it's not paid or not claimed, then it goes to unpaid dividend account within 7 days. After it comes to unpaid dividend account, you will within the next 90 days. Now you look at this. If it is not paid, it's my fault. But if it's not claimed, it's your fault. Correct? Either case, don't you want to know the breakup of this 200? How much is not paid? How much is not claimed? Who are those people? Their last known bank account details, last known address. Don't you want to prepare one summary report, one breakup? So, in the next 90 days, I will be preparing one statement. And this statement will basically have details of the shareholder's name, how many shares he has, how much dividend payable, his last known email ID, all those details. Are you following, guys? And then this statement will be published on the website of company, and central government will authorize a few websites for this. So, it will be published in 2 websites. If company has a website, that website. Central government itself has one separate website. I will publish in both these. Within how many days? Next 90 days. So, who will do all this work, sir? Passing all these entries, sir, and preparing this statement, transferring to unpaid dividend account. To ensure that the complaints is happening within 5, 30, 7, 90. Who will do? Our brothers and sisters, CS will do. Company secretary. Are you following, guys? This is not work of a chartered accountant. CS will do all these things correct at time which is happening. Otherwise, he will have his penalties. CS in the company. Are you following, guys? Clear? Now, money will remain in this account. Which account? Unpaid dividend account. Money will remain here for a total period of, let's say, 7 years. But from when, sir? 7 years. From the time it came into unpaid dividend account. Are you following? So, let's say it came to this account on the 3rd day. So, from that day, 7 years. That means this 90 days is inclusive in 7 years or exclusive? Inclusive. So, 7 years from date of entering what, guys? Unpaid dividend account. Are you following, guys? From 7 years from date of entering into unpaid dividend account. Are you all following, guys? For 7 years, I will wait. I will wait for whom? for the shareholder to find me and ask for dividend, or I will try to find him. See, I did not pay because I sent him the dividend warrant, he didn't claim, or his bank account is changed now. When I transfer to bank account, it's saying bank account is not existing now. Are you following, guys? So 7 years time is given for you guys. Are you all following? After 7 years, what will happen? After 7 years, you should tell me the logic. After 7 years, what will happen? It will go to the government. It has to be whatever balance. For example, we transferred 200 to unpaid dividend account. Let's say after 7 years, still 30 is left. Are you following, guys? Out of 200, 70 has been claimed. How much is left? 30 has been left. So this 30 alone, guys, this 30 alone within will go to another account called IEPF. IEPF. Are you following? IEPF full form is Investor Education and Protection Fund, which is basically a authority under the government. Authority under the government. Are you following, guys? Now let me explain the whole thing again one more time. Follow. This 5 days is there, no? 5 days. That is section 123 only still. That is section number 123 only. From this time till the 7 years ending, correct? Do you see that? That is section 124. The minute it goes to IEPF, it is section 125. Are you following, guys? Are you following? From the 6th day, after 5 days, okay, the whole provision is there in section 124. Are you following? Clear? Are you all with me, guys? So let's revise the provision one more time, then I'll tell you the logic as to why it goes to IEPF. We'll discuss all those things. With me, guys, follow. Once dividend is declared, it has to be transferred to separate bank account within. Repeat with me loudly, online live and recording. Keep repeating with me now. Transfer separate bank account within 5 days. It has to be paid within. If it's not paid or not claimed within, not paid or not claimed within 30 days, then it gets transferred to unpaid dividend account within 7 days. If you are you following, guys? Unpaid account within 7 days. Once it comes to unpaid dividend account, within the next 90 days, you have to prepare a statement with all those details I told you, and you will publish in central government and our website. Not central government and state government, central government and our website. Okay. Then money will be in unpaid dividend account for total of 7 years. After 7 years, it gets transferred to IEPF section number 125. Are you following, guys? One more time, repeat with me much more faster now. Once I declare separate bank account within 5 days, has to be paid within. If it's not paid or not claimed, then within the next 7 days, it will be transferred to unpaid dividend account. Are you following? Then it will remain here for 7 years. Remain for 7 years, but within the next first 90 days of 7 years. First 90 days of 7 years, you will prepare the statement. After 7 years, what will happen? IEPF. Now there are one question. Why 7 years and why IEPF after 7 years? So follow. What if dividend is not paid in the 4th year, company is getting closed down? Finding a possibility is there. So it is just 7 years kept, hoping you will come in 7 years. If company is closing down in the 4th year also, balance will go to IEPF, because company may come and company may go, but government will always be there. Only ruling party will change. Government is always going to be there. So why they are transferring to IEPF? It's a fund of the government. It's a fund of the government which they will maintain, because after 20-30 years, company may not be there. So after 7 years, if you want your money, you have to go and get from IEPF, which is the government. Are you following, guys? One practical example, when I was doing my articles back in 2013, okay, 2013 when I was doing my articles, I stayed in my same house from the time I was in, 7th standard till almost 28, 26, I stayed in the same house. So in the same apartment, actually from the time I was born till 28 years, I stayed in the same apartment, just next to the house, okay, same building. So when I was doing articleship, I was cleaning my cupboard. There I found one small cover with some old share certificates purchased in 1994, 1992, 1995. All those things my dad purchased long back. There were some 30 or 40 share certificates. Then I went and asked him, because I was doing articles, I knew a little bit about these things. He told, oh, I purchased that. He forgot. He forgot that he purchased all those shares back. He kept them in some cover. That cover has been there for so long, because that's the same house my dad lived almost fully. Okay. So when I saw that cover, I took those share certificates. It was very old. Some share certificates print also was not there. Now, all those shares of 1994, when I went and did the research, Google Apota, some company itself is not in existence now. Some companies are not even in existence today. They are not even there. Some companies like Bajaj Finance, Oriental Bank of Commerce, that time in 2013, now it's merged with the Bank of Baroda, Punjab National Bank. It's merged. Some 2-3 shares alone were there. So that it took me 1 to 2 years to convert that into shares and claim that money if some dividend or anything was pending for that. Some things were there. Okay. So that one, if you see, it is more than 7 years of 1993. Now I saw in 2013. So almost 20 years. So after around 2000, all that was transferred to IEPF. So whichever company was in existence, I had to go to IEPF and collect it. Whichever company is not in existence, if any money was due payable to me, we have to mail to IEPF and get it. Those days you have to go in person. Now email will work. Hopefully they reply. Are you understanding, guys? So for this reason only, after 7 years it goes to IEPF. Is this clear? Everybody clear? Yes. So Praveen's doubt is, if it goes to IEPF, can I claim after 100 years? Yes. My great, okay, now let's say, now my dad kept one share in 94. I also forgot to see. After 2 generations, in 2050 also you can go claim. But you have to, the procedure will be very lengthy. You have to give all the documents. There are some people, okay, I know because it's through my family only, one of my relative, what work he does, you know, his work is this only, and he's earning in lakhs every month. Whosoever share of every company which is there in IEPF, data is publicly available. You can go to IEPF website, you can download company wise how much money is payable to each person. For example, Reliance, money will be in thousands of crores. Are you following? That money will be there, some interest will come, very, very minimal interest. This advocate, what he does, full-time job, he goes to IEPF website. Every month they will keep refreshing the data because new companies will upload their, he will download that data. He will, in that IEPF, they will share that person's limited information, okay, like name, last known address, whatever is there. That information he will take, he will try to find that person wherever they are living in India or the world and connect with them somehow, okay, through the company. He will have some friends in some company, connect with them. For example, I found Gokul is one of them. Then I will call Gokul. Do you know Gokul? Some money is there for you. Abdiya, I didn't know, he'll tell. I will help you get that money, 10% commission. What Gokul will tell? Yeah, I don't know what. So I will take care of all the procedures, get that money. Now, since I'm doing this for so long, IEPF committee will be known to me. Correct? So if I apply, I know quickly what to apply. Gokul will get the money, 10% commission, earning in lakhs. How is the work? CA, no. Advocate, is he going to court? He will not even move out of the house. Sit in the house, computer, sit there, one phone call, that's it. Earning in lakhs every month. But you have to, this one technique, okay, like this you will find a lot, guys. Okay. Done. Clear, guys? Okay. Let's revise one last time, guys. Again, quickly. Once dividend is declared, separate bank account within 5 days. Pay within 30 days. Next, transfer to unpaid dividend account within 7 days if it's not paid or not claimed. Money will be in this account for 7 years. But within the first 90 days, prepare a statement and publish on the website. Now, what if they don't transfer to unpaid account within 7 days? What if they don't transfer? See, if I just keep 7 days, company will not do it. So, if you don't transfer within 7 days, if it is more than 7 days, then company has to pay interest at 12%. Are you following, guys? Company has to pay interest at 12%. Are you all with me? So look at how they have sequentially arranged the sections, and you will remember section numbers now. With me, guys, let's remember section numbers. Look at this. Dividend is declared and paid in which section? 123. With me. Generally, in this point only, I'm going to add the webcam, and you will be seeing recording students in subsequent classes. You will be able to see all our students also when they are repeating section numbers. So 123 is what? Declaration of dividend. If profit is not adequate, then rule 3. Profit is not adequate, rule number 3. How many rules? 3 rules. If dividend is declared and not paid within 5 days, then it goes to 124. It goes to 124. That is the next section, unpaid dividend account. Here also it will stay for how many years? 7 years. So recording students, I'm just continuing, nothing to worry for you guys. This timeline we saw fully, and I told you how to remember section numbers. We were at this point. 123 is what? Declaration of dividend. 123 has how many rules? 3 rules. If profit is not adequate, that is rule number 3. Now, money will, if dividend is not paid within 30 days, how many days? Then it goes where? Unpaid dividend account, which is 124. Now, once dividend is declared, it has to be paid within 30 days, and separate bank account within 5 days. Now, look at the flow of sections. Now, you will easily remember the sections. 123, clear of declaration of dividend. Rule 3, 3 rules. And then next, if you see, 124 comes immediately next. If you don't pay within 30 days, within the next 7 days, and money stays in this account for 7 years. Now you add 1 plus 2 plus 4, how much? 7 is coming. So money comes into this account. If it is, you have time of 7 days, it stays here also for 7 years. 1 plus 2 plus 4. Now if you don't transfer within 7 days, what is the interest? What is section number? 124, 1 to 12. So 124, interest is 12. 124, 1 plus 2 plus 4, 7. 7 is 7 days, 7 is 7 years. Are you following, guys? Able to remember? Now, after 7 years, what will happen? It goes to IEPF, which is my next section. Is this clear? Are you all able to follow, guys? How to remember section numbers now? So 123, 124, 125. It's there in a sequence. Clear? One last time, let's revise this, and I'll go to next section after this. From the date of declaring dividend, separate bank account within 5 days. Which section? 123. Once it's declared, it has to be paid within 30 days. And then if it's not paid or not claimed, then within the next 7 days, it goes to unpaid dividend account. 7 days goes to unpaid dividend account. And then if you don't transfer here within 7 days, interest is 12%. Money will stay here for 7 years. But within the first 90 days, I will prepare a statement and publish on website of company and central government. Are you all following, guys? With me? Okay. After 7 years, it goes to IEPF. And there will be some, if you don't follow any of this, there is some penalty. Let's see 124. Quickly, I'll read here, then we'll go to the next section. Where dividend declared remains unpaid or unclaimed for 30 days from the date of declaration of dividend, this section gets invoked. In this, what they are saying, transfer the unclaimed or unpaid amount to a separate bank account named unpaid dividend account with a scheduled bank within 7 days from expiry of 30 days. If such amount is not transferred, company will pay 12% from the date of default. Who will get this interest? The government. Members. Members will get. Such interest shall be accrued to the members in proportion of the amount unpaid. In that ratio, it will be approved. Any money transferred to unpaid dividend account shall remain unpaid or unclaimed for 7 years from the date of such transfer will be transferred to investor education and protection fund after 7 years. Within 90 days of transferring amount to unpaid dividend account, you will prepare a statement containing name, address, amount unpaid, all those things. Publish in the website and website approved by the central government. I gave it off as paragraph. Clear? All the points are here as paragraph. We have just done it over here in one small timeline. Clear, guys? Contravention of this section 124. Generally in penalties, there is nothing much for me to teach. I will explain how a penalty works, but you only have to memorize this. Towards the end, I will tell you what are all the important penalties to remember. So company, if company is not following above timelines, 7 days didn't follow, what 90 days they didn't prepare statement, any of that, company 1 lakh standard penalty and 500 in case of a continuing offense. For example, statement should be prepared within 90 days of 95 days they took, extra 5 days, 500 rupees per day of offense, maximum up to 10 lakhs. Officer in default, who's the officer? Our CS. He only is responsible of 25,000 rupees for him and 100 rupees per day of continuing offense, subject to maximum of 2 lakhs. See, standard penalty, fixed amount is 1 lakh and 25,000. That is clear. Is that very much clear, guys? Now, what is continuing offense? Continuing offense basically means I have to do it within 90 days. I didn't do it till 108 days, for example. How many days delay? 18 days. For each day, for company 500, for officer 100 rupees. But that also can go maximum up to 10 lakhs or lakhs. That means what they are trying to say, can you divide 10 lakhs divided by 500, how much you are getting? 10 lakhs divided by 500, how much? That means they are allowing you a delay of up to 2000 days. That's 365 into how many years, case? Almost 6 years, huh? Almost 5 to 6 years, correct? That much also you have delayed, means that time only this continuing offense will stop. Until then you have to keep paying. For example, I have to give statement within 90 days. Up to 2000 days of delay is the penalty. Beyond that, what they will do? This is exceptional. Okay, exceptional case. Are you following, guys? Are you understanding the logic of what I am saying? This continuing offense will continue up to 2000 days of delay. Practically nobody will do that. When this will happen? If I forget to apply the provision, that's when it will happen. Clear? 124 is done. What is next section? 125. 125, I will not take it now. I will just give you an overview. If you look at section 125, this is like a account of the government and the account is called IEPF. Are you all with me, guys? In 125, the overall brief is when money will come in, when money will go out. Are you all with me? When money will come in, when money will go out. For example, in shares, now when money will come in after 7 years. When money will go out, whenever they claim. But this is not only for shares, for any debentures which is not paid, for any deposits which is not paid, anything the company has to pay to its stakeholders, if they have not paid, addition will happen here. Whenever I am paying them, deletion will happen here, and there are some more reasons when addition will happen here. For example, Gokul has done a fraud. I arrested him. He did fraud and earned 5 crores by cheating investors. That money also will come here. Will come here. Which officer takes as suitcase, we don't know. Okay. It will go out. For example, some company cheated investors, then company will pay them. Okay. In detail about section 125, credits to the fund is when money will come in, debits is when money will go out. I will take it in the end after we finish entire law. Okay. That means I will start off with section what? I will start off with dividend chapter, end law with dividend chapter, because all these additions and deletions, each addition is one chapter's addition. Okay, each of these additions you will learn in different chapters. Are you getting it, guys? So later when I come and summarize over here, you will understand. For example, one over here is deposits chapter. This is share capital chapter. Then this is meetings chapter. Are you following, guys? So each is one chapter. So once I finish all the chapters, it will become easier. So we will start and end with dividend. Okay, clear, guys? Let me go to the next section. Last two sections, guys. Follow, guys. Next section is very simple. So now again, come back to section numbers. What is 123? Declaration of dividend. Rule 3, 3 rules. 124, unpaid dividend account. In that, money should come here within 7 days. Money will stay here for 7 years. If you don't transfer 12%, after 7 years it goes to IEPF. And next is 126 and 127. Chapter will get over. Correct? What is 126? Let's see. After I see, I'll come and explain. Now follow. Let us take two brothers. We will say we have Dhirubhai Ambani, who has two kids. Correct? Mukesh Ambani and Anil Ambani. Correct? Now, after the demise of Dhirubhai Ambani, the wealth got split between Mukesh Ambani and Anil Ambani. Did they fight? Yes, they fought. Okay, and it got split. Whatever fight they have, leave it, guys. This is something which commonly happens in almost many Indian families. Who gets how much money at the time of splitting of inherited wealth? Correct? Our goal here is not that. Our goal is, let's say a case is going on between both of them as to who gets the shares of Dhirubhai Ambani. Now, these shares either will go to Mukesh Ambani or it will go to Anil Ambani. So, during these both are fighting in the court, let's say in the court they are fighting. You know, Indian courts, they finish the case in 1 month or 1 year or 5 years. Okay. So, it takes time, guys, because there are so many cases. In near my house, one guy filed a case because the neighboring dog was coming and peeing on his car every day. Like this, if case is coming now, what court will do? Okay. Now, my question is, during the time the case is pending in the court, the shares, the company declared dividend, who will get this? Are you following? Are you following, guys? So, whenever there is a dispute with respect to ownership of shares, in that time, who will get that share? That is case number 1. Second case, no dispute and all, sir. Let's say Gokul is there. Gokul is transferring shares to his girlfriend. Okay. Gokul here has 100 shares. Today, we will transfer money by GPay. But those days, we used to transfer by giving check. Those shares also, today, if I want to transfer shares from Gokul to his girlfriend, it will just take 2 seconds, like GPay. But those days, there used to be a process where Gokul has to apply to the company, and company will then transfer to his girlfriend. Yes, Gokul, your girlfriend's name? No, okay, fine. So now, let's say Gokul applied on 12th Feb to transfer the shares with a goal that she will get the shares before 14th of Feb as a gift. He wanted to transfer on Valentine's Day, he wanted to give gift. He instructed the company to transfer. On 13th Feb, company declared dividend. Gokul thought, ayo, missed it. I missed the dividend. Or company gave some bonus. Are you all with me, guys? Now, who will get this? Shares are not Gokul's also. Shares are not girlfriend's also. Because on 12th, he gave away the shares. Now it's pending transfer for the new person. On 14th only she will get it. Correct, guys? On 13th, company gave bonus or dividend or some benefits out of share. What all benefits company can give out of share, guys? One, I can give dividend or other benefits like bonus or rights or whatever benefits. Who will get this? Are you following, guys? These two cases only. In case of a dispute or share is getting transferred and it's on in the process, in that time during dispute or during pending transfer, if a company is going to give one of these three, One of these three means what? Either they're going to give dividend, bonus, or rights. Who will get this, guys? Dividend will be kept on hold. We will transfer to section 124. What is 124? Unpaid dividend. Until the dispute is resolved or until transfer is over, then from unpaid dividend you will get paid. Are you understanding, guys? And bonus and rights, if any, will be kept on hold, or that hold is also known as abeyance. Are you all with me, guys? Understanding? Clear? Are you all following? Hello? Which section is this? Section 126. Are you all with me, guys? Let me just write rights and bonus first, because rights is generally more, and then bonus. That's what is there in Act also. Now, let me go and read section number 126, small section. That's it, guys. That's it. Look at this. Where any instrument of transfer has been delivered by shareholder for registration. This is Gokul and his girlfriend. Gokul told the company to transfer the shares, and transfer of such shares has not been registered there on 13th of Feb by the company. The company shall transfer the dividend in relation to such shares to the unpaid dividend account. Or sometimes on 13th itself, what Gokul will do on 13th, he will tell the company, no, don't transfer unpaid dividend account. Give it to my girlfriend, it's fine. So he has to tell the company in writing, hey, you pay my girlfriend, it's okay. Then in that case, what will happen? In that case, what will happen, guys? If he instructs the company in writing, then that money will be paid to the other person. Are you following, guys? Clear? And then what are the other benefits I told you, guys? Rights or bonus. These two also keep in abeyance. What is meaning of keep in abeyance? Keep in hold. In relation to such shares, any offer of rights share and any issue of fully paid up bonus share. Keep it in hold. They will just hold it until the dispute is settled or until transfer is completed. Are you following, guys? Hello, are you understanding? Okay. This section number 126. Let's revise all the sections so far. 123. Keep repeating. Declaration of dividend. 123, rule 3. 3 rules. 124. Unpaid dividend account. Money should be transferred within 7. Money will stay here for 7 years. 125. IEPF. 126. Abeyance. Abeyance section. Now, in 126, what are the 3 things in abeyance? Dividend, rights, bonus. Correct? Dividend will go where? 124. What is section number? 126. So last 2 numbers is what? 26. Reverse 26. What is it? 62 is rights issue. I am yet to teach you rights issue. I will teach you in share capital after 20 hours from now. But that 10 we will discuss. Okay. So 62 is what? Rights issue. What is 126? 26 you reverse the. What is it? 62. Correct? 126. 26 we reversed and we got what? 62 rights. What we missed in this number? 1 now. The 26 we reversed. 1 is left out. So what is 62 plus 1? What is 63 section number? That's all. So 126 talks about abeyance of dividend, rights and bonus. Rights and bonus section number you are learning from section 126. 62, 63. Are you getting it, guys? So what all section numbers we have learned so far? 51 and 43 also. Correct? And 47. Of course, when I go to those chapters, we'll again revise that. But now look at this in the first session itself, in first chapter. What is 123? Declaration of dividend. You keep repeating with me, you will easily remember. 123. Declaration of dividend. Rule 3. 3 rules. 124. Unpaid dividend. 7 years it will be here. 12% is for 124. 125. IEPF. 126. Abeyance. Within 126. 62. Right. 63. Bonus. 127. Penalty. 127 is penalty. Are you all with me, guys? 127 is penalty for, I will come to that. Next, additional sections. 51. If paid up share capital or face value, on what I will pay. 43. Types of shares, equity, preference. 47. Voting rights. But don't worry, these sections in that chapter you will learn. For now, before dividend, am I clear with these sections? Are you following, guys? Can we do the last section 127 and close this chapter? Small one, 10 to 15 minutes. Yes, and then chapter will come to an end, guys. We only have interim dividend and 125, which we will do it later. Okay. Are you all with me? Hello. Last section 127. This section is very simple, guys. Very, very simple. Once dividend is declared, it has to be paid within how many days? If you don't pay within 30 days, two things happen. Within the next 7 days, you will transfer to unpaid dividend account. But Companies Act is saying this interest and this thing is for transferring to unpaid dividend account. However, if you have not paid or not paid within 30 days, look at this. I have to punish you. So 127 says from the time of declaring dividend within 30 days, be very careful here if it is not paid only. Because not claimed is whose fault? Shareholder's fault, not my fault. So 127 penalty comes only when it is not paid. Are you following? I'm writing it 2 times, guys. Are you following, guys? Not paid. Then there will be an interest from the 31st day. How much, sir? What will be my interest? Now this is a punishment, correct? In 124, how much is interest? 12%. 127, anything punishing in nature, big punishment for not paying, it is 18%. How to remember? 124, 1, 2, 12. Here 127. You tell me how to remember now. 1 plus 7, you got it. 1 plus 7, 18%. So I will come down over here and write down 127 is going to be 18%. Are you following? From the 31st day. Is that clear, guys? Apart from that, there is some more penalty. Let me show you, guys. 127 ends over here. Look at this. Fails to pay within 30 days dividend warrants, then what is the interest? Company will have to pay 18%. So what I discuss now is company. Look at this. Where is that? Yeah. So company will pay how much, guys? 18%. Are you all with me, guys? Now, can I put company in the jail? No. So if director is not paying, company will pay 18%. But what will the director, the CS, the management, they should also be punished. So for them, there is a double punishment. What is double punishment? Rupees 1000 per day and up to 2 years imprisonment. Are you following, guys? 1000 rupees per day up to 2 years of imprisonment. Are you all with me, guys? Understanding? Clear? Following? Sure, guys? Hello? So let me repeat again. 127 from which day? 31st day. If it is not paid, very, very important penalty we should remember. For company, for officer, 1000 rupees per day and up to 2 years imprisonment. It can be even 20 days in jail, but up to 2 years. Let's go here. Read this. Come down. Yeah. Every director who is knowingly a party of default, intentionally I did, sir, imprisonment up to 2 years and liable to pay a fine of 1000 for every day during which the default is continuing. Are you all following, guys? But in certain cases, this penalty is not applicable. Let me explain. There are only 3 to 4 cases. First case, I will give you example. Now, on 15th March 2020, company declared dividend of, let's say, 100 crores. They thought of sending the post to everybody on, let's say, 21st March 2020. But can they send the post? No. Why? That day we were all clapping in terrace, you remember? That day we were clapping. COVID came, we were clapping first, you remember? Then 1 week after that, we were having lamp, candle. So how post will go? Okay, then what happened after that in April? Lockdown. So postal department did not work for almost 6 months in COVID. Okay, see, actually in 2020, they can do online transfer. But imagine a scenario where we are sending post. So postal department not working because they were clapping that day. So full country went for pan India lockdown. Correct? You remember, guys? Yes or no? So this time, can I punish the company? Let's say 30 days over, they couldn't pay. Can I punish them? No. So first exception, this section is very, very important. 127. So again, repeat with me. If you don't pay within 30 days, for company, what is the penalty? 10%. For officer and director, 1000 per day, up to 2 years imprisonment. But there are 5 exceptions, and you have to remember all the exceptions. The first one is by operation of any law. What is it? COVID. COVID came, government declared emergency for the whole country. Are you following, guys? Clear? One exception done now. I will tell you 5 stories, 5 small stories, and then we will be done with all the 5 exceptions. Are you all with me, guys? Clear? Let me take this example itself. Ambani example. What is it? Fighting. Okay, whom to pay? Company doesn't know. How to punish company? Can I punish? No. Or shares are being transferred. Transfer is taking more than, for example, Gokul told to transfer to his girlfriend. When he submitted the application, he gave 2 girlfriend names. So company got confused whom to transfer. They replied back to Gokul and they sent that notice to both the girlfriends who should get the shares. He got caught. So now he's trying to sort that issue. That took more than 1 month. Whom will they pay? No one they can pay. Correct? Now whose fault is it? Not the company's fault, Gokul's fault. By mistake, he in sleepiness, he wrote both the names. Okay, so second exception, where is that? I am not going in order. Third, where there is a dispute with regarding right to receive the dividend. Ambani's fighting. Whom to pay? We don't know. So don't punish the company. Let the dispute get over. Then this dividend will be kept on hold as per section 126. Are you all with me, guys? Following? Yes. Court case. Excellent. Praveen told court case pending. Who owns the shares? Very common in Indian families. Who gets that money? That's it. Are you following, guys? Next example. Like this, I'll give you few examples. So second is that dispute. Are you able to connect with the example, guys? Are you following? Gokul, are you not taking seriously? No, pa? It's just for classroom example. Don't take it seriously, guys. Okay. Third, of course, somebody here will have 2 girlfriends, 2 boyfriends. That's not my concern. But Praveen, 2, 5. Okay. Now, next one. Company has to pay the shareholder 100 rupees as dividend. Okay. Shareholder has to pay the company 120 rupees for calls in arrear. Everybody knows what's calls in arrears. How can you not know? In school, 12th standard, this only is half the claim. Calls in arrear, calls. College also calls. Foundation also calls in arrear. In reality, this concept is not even there. Because there is no calls. Everything is paid upfront. Now, so in this case, I have to pay you 100 rupees. You have to pay me 120. Will I pay? I will adjust. Are you following, guys? So look at this. Where, fourth point, where the dividend has been lawfully adjusted by the company against the sum due to it from the shareholder. Now I'm going to ask you a question. This company is, let's say, we will call it, let's say, Apple. Okay. Are you following, guys? Apple has to pay you 100 rupees per share as dividend. You have to pay Apple nothing, no calls pending. Okay, but you purchased what? You purchased then iPhone on EMI basis. Purchased what, guys? iPhone on EMI. EMI you did not pay. Can I adjust this EMI with the dividend payable? Answer: no. Read the words very carefully. It is some due to it from the shareholder, not some due from the customer. Of course, customer and shareholder are one and the same here, same person, but they are in different shoes. Here, some due as a shareholder. Are you following? But in reality, company can adjust. Case will go to court. This is where case laws will come. Understood now? So when the case law comes, Apple will argue in the court. The act is drafted as shareholder, but for me is the same person. I want to argue. Are you understanding? So this is an area which can be disputed in court of law. But if I literally read as per what is there here, some due from shareholder. Are you following, guys? Clear. Next, we have done 3 exceptions. Correct? What are the 3 ones? 3: operation of law, dispute, lawfully adjusted. Perfect, perfect. Keep repeating with me, guys. Last example, that's it. With this, exceptions will be done. Last one. Follow carefully, guys. No need Gokul, no Pavam. We'll take somebody else. Let us take Paul. Okay. Paul, do you have any siblings? Brother or sister? Sister. Okay. Fine. Okay. Now Paul is there. Paul is shareholder in ITC. Okay. ITC is giving him cash. Paul told ITC, ITC, I am already a CA now. What you do, don't transfer this to me. Instead of transferring it to me, you transfer it to my sister. Okay. Paul is saying transfer to his sister. ITC also told, okay, they will transfer it. They have transferred it. This is the example. Understood the base example? Are you following, guys? Understood? Now, his sister changed the bank account. Change the bank account. Who has to intimate to ITC about the change? Either Paul or sister. Somebody has to intimate. Nobody has intimated to the company, ITC. ITC tried to pay to the bank account which Paul gave for his sister. But the money bounced and came back to ITC. 6 months got over. Paul met his sister. You got a ITC shares, you should have got some 50,000 rupees dividend. She told, hey, what you're lying to me, simply don't tell all these things. Then Paul went to the company and told, come on, give me 18% interest, come on, give me penalty, all of that. Will they pay, guys? No, because there is no fault of the company. Are you following? Second example. Paul told the ITC to pay to his sister, and his sister is not in India. Let's say she is in Australia. So she has an Australian bank account, and also she has now an NRI. She settled over that example. Okay. The ITC clearly told him, no, I cannot pay to your sister because if I have to transfer to you within India, for me no charges. If I have to transfer to an Australian bank account, I have to convert this to dollars and do it. Additional cost for me. They replied back to him saying, no. So Paul also did not give his bank account details. Sister also did not update anything. Now will company be liable? No, because company clearly said no. And Paul only is now supposed to change the bank account. He didn't do in second example. Whose mistake? Paul's mistake. Now third example. And then when we read the line, you will understand fully. Sister is in Australia only, same bank account. Paul told ITC to pay his sister. ITC wanted to say no, but they forgot to inform Paul. Are you following? So Paul informed whom? ITC to pay to his sister. ITC said they don't want to pay, but they did not inform Paul, they did not inform sister. They themselves decided not to pay to sister, so they didn't pay anybody. Now is ITC liable? Yes. Now there's a fault of company, they have to pay penalty. Got it? All three examples without me giving the answer. The way I framed it, you got the answer. Now read the provision. Second exception, where a shareholder, who's that? Paul, has given directions, in our case, instruction to the bank, to the company, regarding the payment of the dividend. What instruction he told? Pay to my sister, and those directions cannot be complied. The company is saying we will not comply with this because it's in foreign currency, different bank account, and the same has been communicated to him. Are you following, guys? So the fact that ITC cannot pay should be informed to Paul. Are you following, guys? Should be informed to Paul. If they don't inform, then whose fault? Company's fault. So triple condition, direction should be given. If company is saying they cannot comply, that should be communicated back to shareholder. Clear, guys? Let me give one more example. Paul, or no need Paul, let's go back to Ashwin. Ashwin is telling the company, don't transfer dividend to my account. You purchase Bitcoin and transfer to my Bitcoin account. Will company follow? Okay, but company was silent. Company did not respond. They were very silent. So instead of Paul, let's say we have, for example, Ashwin telling ITC to give him Bitcoins. Now, if company cannot follow it, they have to intimate whom? Ashwin. Then they are not liable. But if they fail to intimate, then who's liable? Company is liable. Is this clear? Is this clear? Let me read this again. Ashwin, follow. Where the shareholder has given directions to the company. Ashwin has told the company to transfer to his Bitcoin account regarding the payment of dividend, and those directions cannot be complied. Company cannot do that. Then they have to intimate to the shareholder. If they don't intimate, then company is liable. Even though transferring to Bitcoin account is unrealistic, company should reply back saying no, it's not possible. Understood? That no is very important in life. For example, if you are talking to one person, if that person doesn't like you, if they are silent, then I will still keep talking no. I will think they like me. If they tell no, what you should do? You will stop. What you will do? Message on Google Pay. Send email. Okay. Clear, guys? Last one. Yes. See, first of all, why will you make a request? Money is coming to your bank account. The doubt from him is that every shareholder will make absurd request. If you make absurd request, same day company will reply back to you saying it's not possible. Why CS is there? What is CS work? To ensure all this happens properly. Are you following? First of all, if you have shares in ITC, what request you will tell them? Tell me. Tell me what you will, nothing. This is exception. Are you following it? Clear? So in these cases, company is not liable. Last one, for any other reason apart from these four what we discussed, where the default is not the fault of company. Anything else? Can you think of some other case where not fault of company? For example, company posted the dividend through post. The post got lost. Whose fault? Department's fault, not my fault. So once I find out, I will send you a new post and cancel the check. Are you following? Are you understanding, guys? Any other reason not fault of the company. So let's revise this section. Yes. Yeah, mismatch of bank account. One more reason. Praveen is saying mismatch of bank account. You gave wrong bank account number. I transfer to that. Is it my fault? No. Anything else? Basically, if you look at these 5 points, the summary is it's not company's fault. Are you following, guys? Clear? So what are the 5 exceptions? Very clearly follow. First is operation of law. COVID, operation of law. Next is dispute. Then lawfully adjusted. Then directions given, it cannot be complied, and any other reason. Are you following, guys? All the keywords I have given it over here in red. Are you following, guys? Yes. Let me just take up a doubt of student is asking. Bank account is given by shareholder, but that bank account number has changed. So company made the payment, share did not go through, dividend did not go through, account has bounced. Correct? The doubt is, I had to pay to Ashwin. Ashwin's account, he changed it, forgot to tell me, so I couldn't pay him. Money came back to me. Now whose fault it is? It is Ashwin's fault only, not company's fault. But however, company will still try to reach out to Ashwin and ask Ashwin practically what is his new account. That's an extra effort company is doing, but it's not company's fault. Clear? Online students understood the doubt? The doubt here is, what if the shareholder changed the bank account, forgot to intimate company? Should the company call the shareholder and ask him if he changed? Law is not asking for that, but company will do it by themselves. Clear, guys? Online students? Clear? Okay. That's it. We are done with all the sections. Let's revise section numbers alone once. What is section 123? Declaration of dividend. 123, rule 3. 3 rules. 124, unpaid dividend account. In unpaid dividend account, within how many days? 7 days. Money stays here for 7 years. Interest 12%. After 7 years, money goes to IEPF, section number 125. And then if there's any dispute or share transfer pending, section number 126. In 126, you have rights and bonus. Rights is 62, bonus 63. 126, 26, 62 and 63. And if dividend is not paid within 30 days, penalty section 127. Interest is 18% and director or officer, director 1000 rupees per day, imprisonment up to 2 years. And this has how many exceptions? 5 exceptions. Operation of law, dispute, go through all of those. In other sections we saw 51, face value or paid up value, whichever. It's actually nominal value or paid up value. 43, kinds of shares. 47, voting rights. Here guys, are you all following? Understood? So with this, we are done with dividend chapter. I just have 2 more concepts left in this. One is interim dividend, which we will do in the next recording for recording students. And last one is section 125, IEPF. We will do it in the last recording. It will be part of your recordings, but watch it in the ending, or you can watch it now if you can understand. Are you following, guys? With that, dividend chapter will come to an